Hello everyone and welcome to today's session where we are going to discuss about branch accounting. Now this is probably the only chapter in your entire accounting syllabus which is not linked to company accounts, and over here you can possibly get a question, maybe not a full-fledged 14-mark question, but maybe a question for around 6 marks, 8 marks as well. So the only thing which is not linked to accounting standards or company accounts as a case maybe is branch accounting here in front of you. So from a solving perspective, just practice as many sums as possible and get done with this. There is no set rule or accounting standard which governs branch accounting, and as a result the treatment over here may involve various types of methods which can be used by the entity. So first of all, when we look at branch, what do you mean by a branch? Now necessarily if there is a branch, it may be usually having a different location as compared to a head office. So let us say my head office is based in Mumbai. I want to expand, let us say in Tamil Nadu, in Gujarat, in West Bengal. In these cases, I might decide to open branches over here. If I open these branches in my own country, these are called as inland branches. Whereas if I open it outside India, let us say I decide to expand into the US. In which case if I open a branch in the US, these are called as foreign branches. Now, when you look at these branches, inland branches or branches within India, if they are fairly small branches, like you have just set up a small office, let's say in Delhi, to book orders, all your business manufacturing operations are happening, let us say from Bombay only, in which case it does not really justify loading that branch with a separate accountant, separate set of books, etc. It's already a small liaison type of an office, and as a result what we'll do is we'll maintain all the accounts, we'll do all the accounting from the head office. So these are branches which we usually call as dependent branches, where all the accounting is managed, handled from the head office. On the other hand, you have a branch called as an independent branch, where it's a fairly big branch, and hence it can afford an accountant, separate set of books and accounts can be maintained, and hence you'll have independent branches. So first we'll focus our understanding on how do you account for Indian dependent branches, then you go to independent branches, and then you go to foreign branches. Just a disclaimer before you go to foreign branches, be sure that you have touched upon AS 11 for foreign exchange conversion principles. So let us go to the accounting for dependent branches. Again, the accounting is done from the head office. So all of these books of accounts, etc., are kept in the head office, and there are three branches. There are three methods in which accounting can be done. First, there is something called as a debtors method, in which case you will treat the branch as if it is your debtor. It's a separate party which is your debtor. So for example, when you supply goods to a debtor, your entry is debtor account debit to sales, right? In a similar way, when you supply goods to the branch, your entry will be branch account debit to goods sent to branch. Similarly, over here, when let us say the branch might sell these goods and it will receive the money, the branch may remit this money back, in which case it is like collection from the debtors. So bank account debit to branch account. Now what the debtor does with the goods, that is he sells the goods, does not really matter. What we are going to look at is usually the transaction between the head office and the branch, or the transaction by the head office on behalf of the branch. So for example, if the head office paid certain expenses like rent directly on behalf of the branch, it is like you doing something for your debtor, in which case you will debit the debtor, so branch account debit to bank for your expenses. However, if the branch itself spends some money, then there will be no separate entry. So this is best understood when you try to do it through a sum. But over here, when you look at the debtors method, this method says that the transactions between head office and the branch are recorded in a single account. You're not going to prepare multiple accounts like goods sent to branch, cash sent, cash remitted. All of this is going to be accounted for in a single account. Under this method, branch is treated to be a separate entity like a debtor, and hence the only transactions between head office and the branch, or transaction by the head office on behalf of the branch, need to be recorded. The transaction between branch and third parties are irrelevant. Once we make a sale to our debtors, what a debtor does with that is none of our concern. So things like credit sales done by the branch, goods returned by the branch's customers are irrelevant. However, the money remitted from the branch to the head office, or the goods returned by the branch to the head office, are relevant. The balancing figure, in the branch account signifies the net profit. So when I look at the opening balance in the branch account, that will be the opening balance of all the debtors of the branch, stock in the branch, furniture or assets of the branch, opening and closing balance. So this is to balance carried down by balance brought down, and over here the difference when you prepare the entire branch account will be taken as the net profit. Okay, so over here, just a second. So over here, in order to find the balancing figure, we need to find a closing balance of stock, debtors, petty cash, for which a separate working note or memorandum accounts like working notes may need to be prepared. So we have given a sample branch account where in the opening balance you will have balance of the relevant items like stock, debtors, furniture, petty cash, etc. Similar items will also be there in the closing stock. During the year, the transactions between the HO and the branch, when you send goods to the branch, or when some of these goods get returned by the branch to the head office, or when certain cash is collected from the debtors and it is remitted, or even cash sales are remitted, transaction between HO and the branch. If there are certain payments, expenses paid by the head office like rent, salary, etc., and after all said and done, so this is going to give you your profit. Remember, since we are crediting, it is like saying we are crediting sales, but instead of crediting sales, we are crediting cash collection. So do I need to separately record any bad debt expense or discount allowance? No, because if the sales were 100 and 10 rupees went bad, 5 rupees is a discount, your cash collection and remittance will be 85 only. If 80 is only remitted, then 80 will come over here and then 5 will come below. So over here, you are basically recording sales on the credit and expenses you are recording on the debit, and hence the difference, if any, will be attributable to the profit. So what we will try to do over here is, we will try to do a couple of questions. Since we have directly recorded cash collections, we do not need to separately record bad debts or discount allowed. Now, there are other methods as well, like the stock and debtors method, where you prepare separate accounts for stock, for debtors, for expenses, everything you prepare a separate account, and then the trading and profit and loss account, where considering branch to be a separate entity, if you were to prepare the trading and profit and loss account, that will give you an overall position. We'll do questions on each of them, but before that, we'll at least start with question number 1 here. I think which will be under the debtors method. So let us review this. So if we review question number 1, this is Buckingham Brothers have a branch in Nagpur. So this is a Bombay head office having a branch in Nagpur. They send goods at cost to their branch at Nagpur. However, direct purchases are also made by the branch, for which payments are made by the head office. So even for direct purchases, payments will be done by head office. All the daily collections are transferred from the branch to the head office. From the following, prepare Nagpur branch account in the books of the head office by the debtors method, clearly telling you that this is prepared as per the debtors method. So there will be a single account called as a branch account, which is treated as a debtor for you. Now the opening balance over here will be impressed cash, sundry debtors, and stock. Some of the stock which is transferred from the HO and direct purchases. So total, the opening balance in your stock will possibly be 40,000. So this will be your opening balance. All said and done, if you have what? 40 and 25 and 2, maybe 67,000 in total of all opening balances. Then you have cash sales, credit sales. For credit sales, there will be no impact in the branch account. Cash sales is also there. Direct purchases, well, this is paid. So over here, when you are doing, I don't have space over here, but let us say if you are doing this working, you'll have opening 67,000. Then you'll have direct purchase, payment is made by head office, 45,000. Returns from the customers, okay, this is 3,000. But this is return from customers. This is a transaction between the branch and the customer. No separate effect. Goods sent to branch from HO, 60,000. This is goods sent. 60,000. Transfer from HO, for petty cash expenses. So HO is giving 4,000 to the branch. That is also going to be taken. Bad debts is 1,000. Discount. This will not be taken because on the credits you will just take the cash remittance. Remittance to HO. This is received by the HO is 1,65,000 and remittance to HO not yet received is 5. So over here you will have 1,70,000, out of which 5,000 is cash in transit, maybe 45,000 is for credit sales, cash sales over here, and the remaining what, 170 minus 50, I believe 1,20,000 must be the collection from customers on account of credit sales. Branch expenses directly paid by HO, another 30,000 will come over here. You have closing balance of stock, direct purchase and transfer from HO. So over here you'll have buy balance. Buy balance will have stock. Within stock this will be 25,000. Now comes a problem. You will have debtors, we don't know, impressed cash we don't know, petty cash expenses have been 4,000. So if I look at impressed cash, at the beginning was 2,000. During the year we received further 4,000 from the head office. So this was 6,000 and 4,000 has been paid. So 2 and 4, 6, out of which 4 has been paid, and hence closing impressed cash will still be, I believe, 2,000 only. But then comes debtors. The problem is I don't have debtors, so I can prepare a working note, memorandum debtors account, which is opening at 25. During the year there will be a credit sale which is at 1,30,000, and then at least in the debtors account there will be some bad debts of 1,000, discount of 2,000, returns from customers of 3,000, collection is 1,20,000. I believe that's about it, and hence if you sit to calculate the balancing figure, 25 and 1,30,000 minus what, 3 and 3, 6 and 1,20,000, is it 29,000 if I have not missed something here? No, there is also, I think, remittances which have not been received by the HO. So over here, just a second, if I were to verify this, so even that must have been collected from the debtors. See, 120 though is collected and remitted, but 5,000 is collected, but it is in transit, and hence the remaining 24,000 is the balance in the debtors. So if I go to see, this is probably 24,000. Now if I sit to calculate the profit, the balancing figure like 170 plus 25, I think 51 minus 67, 45, 60, and I believe, is it 15,000? So over here if I look at this on your screen in the books of Buckingham Brothers for the Nagpur branch, you will take all of this, and at the end 15,000, as you can see over here, will be the net profit, which is the balancing figure. And the debtors balance is something that you will have to sit and calculate. Cash balance is also there, but I think that should be fairly easily manageable. So this is regarding how do you do the working in case of the debtors method. That is question number 1 for you. Next you go to question number 2. From the following information, from the information given in question number 1, prepare the Nagpur branch trading and the profit and loss account in the books of the head office. So over here what you will do is, now you are preparing for the Nagpur branch the entire profit and loss. So over here in your opening you will have the opening stock. Now debtors etc. is not there, but the opening stock, I believe if I were to prepare, your opening stock is around 40,000. Let me just review if I have this handy. So over here your opening stock will be 40,000. Now for the branch, during the year there have been certain goods that the branch has received, and later the branch will sell something. So when the branch sells, now you are in the books of the branch as if it is a separate entity. There will be cash sales, there will be credit sales of total 1,30,000 and 45. So your sales comes to 1,75,000, and your closing stock will be appearing as a total, that is 25,000. So this is closing stock 25,000. There will be sales 45 and 1,30,000. There's also returns of 3 and hence 1,72,000. That is right. Now, for the branch to sell something, it should receive goods from the head office. It has received goods worth 60,000. Further, it has also done some direct purchases, and hence both of them are considered. Maybe the payment is done by the HO. However, this is the inventory that is there, which you can possibly sell. So this is direct purchases of 45, goods received from HO 60,000, and hence that will give me the gross profit. However, there will be other expenses like certain expenses which is paid by the head office. I think these are expenses worth 30,000. Petty cash expenses, even if it is paid by the branch, it is an expense 4,000. Bad debts, discounts of 1 and 2,000 as well will come over here. So bad debts of 1, discount of 2, expenses of 30, as well as petty cash expenses of 4,000, and you get the net profit of 15,000. Now, with all due respect, in my understanding, if someone sees the statements, it is a lot more easier to understand looking at the trading and profit and loss account and coming to 15,000 rather than looking at the debtors account and coming to 15,000. Having said that, if you don't have as much accounting expertise or you don't have as much time to manage so many different branches, you can take a simplified approach and take the debtors method, though maybe preparing a P&L or even doing a stock and debtors method that we'll do in some time is a little more appropriate. So over here, this is like a typical finalization of accounts where you book all your expenses, whether HO pays or branch pays, all your incomes, irrespective of how much is actually remitted. So that is how you will prepare the trading and the profit and loss account. Now, before you go to question number 3, I believe this is on the stock and debtors method. So when you look at the stock and debtors method, so trading and profit and loss we have discussed over here. Under this method, a branch is treated as a separate operation. We treated it separate, and we prepared a trading and a profit and loss account in the usual manner consisting of transactions. This will be done as per regular accrual principles. Now, when you look at the stock and debtors method in a usual question, you'll prepare multiple accounts like the branch stock account. In the branch stock account, you'll have the opening stock, then all the movements in stock like goods received from the head office, or let's say goods sold or sent to the customers, or goods returned, or if there is a wastage, all of this will come over here. So this will have an opening and closing balance, which is stock account. Any changes in stock on account of goods received, returned, or even sales, shortage, etc. will be recorded over here. The balance in figure in the branch stock account, if any, is similar to gross profit. Sir, why? Because over here on the debits, we will have goods received, but on the credits, you will have sales, and hence the difference, if any, will be reflected in the profits. The balancing figure will be reflected as gross profit and should be taken to the branch profit and loss, similar to trading account. Okay, next we have branch debtors. This is again the usual debtors account, which has credit, sales, collection from debtors, bad debts, allowance, etc. We'll also have branch expenses. This will comprise of expenses paid by the head office, and balancing figure will represent branch expenses transferred to the branch profit and loss. Now, separately we will prepare the branch P&L. Like when you look at stock, you took only the operating goods sent to branch, like your COGS, that is the cost of the goods. But there can be other costs as well, and hence when you prepare the branch profit and loss account, you will take the gross profit in that, but you will also take the other expenses which may not have been considered earlier in order to come to the net profit. So this will take the gross profit from the stock account and total branch expenses, and in turn find the net profit. This will be transferred to the general P&L. In addition to the above, this is provided the goods are transferred to the branch at cost, which is one of the cases. The complicated case arises when the goods are transferred to the branch at invoice price with certain amount of loading or certain amount of profit. Before we go over there, we'll at least try to get a hang of a question involving your regular stock and debtors method. So we'll go to question number 3, please. So let us review this. The Bombay traders invoice goods to Delhi branch at cost. Okay, the head office paid all the branch expenses from its bank account except petty cash expenses which were made by the branch. So only petty cash expenses go from the branch. All cash collected by the branch was banked on the same day. So whatever is collected is transferred to the credit of the head office. Following is a summary of the transactions entered into by the branch during the year ended 31st December 11. So you have all of this. What do you have to prepare? Branch account. First using the debtors method. Then the branch stock account, branch profit and loss account, branch debtors account, expenses account by following the stock and debtors method. Over here, you will have multiple accounts. And then lastly, the branch trading and profit and loss account to prove the results as disclosed by the branch account. So ideally, ultimate net profit under all the methods should be the same. So if I look at the transactions, if I follow the branch account, the balances, all of these opening balances, maybe 7, 12,600, 200, this is around 19,800. This will be your opening balance in your branch account under the debtors method. Similarly, this is the closing balance, 6,500 and 10,800 and 100. This is what? 16,400. Next, you will have goods sent from HO, 26. This is what you will debit. Goods returned to HO, credit. Cash sales, no effect. Credit sales, no effect. Technically, for cash sales, you can say that this is collected because the question clearly tells you that whatever is collected is immediately banked. But nevertheless, allowance, no effect. Discount, no effect. Bad debts, no effect. Goods returned by customers, no effect. Salaries and wages, all expenses, you have been told, is paid by the head office only. And then 6,200, 1,200 and 800. This is 8,200 net debit on the branch account. Cash received from sundry debtors, this will be 28,500 and that's about it. So basically cash sales as well as cash collection, this will be created. So when I prepare this, maybe 19,800 plus 26,000 plus 8,200, that is about it. Minus on the credits, you'll have 1,000 goods returned, minus 17,500 for cash sales, minus 28,500 for sundry debtors, and minus 16,400. If I see the balancing figure, I believe this is 9,400, which will be reflected as the profit. If I review this, there you go, 9,400, which is reflected as the profit. Is everyone clear? Okay. Next, when you look at the stock and debtors method, you start the branch stock account where you will have 7,000 opening, where you will have 6,500 closing, where you will have 26,000 goods received on the debits, 1,000 on the credits. Apart from that, you will also have cash sales on the credit. Also, you will have cash collection from debtors, or rather, I would say sales over here on the credit. So when you look at the second part over here, you will try to find, if I look at the stock and debtors, the branch stock account, your opening is 7,000, closing is 6,500, as you see over here. Then 26,000 minus 1, that is 25. I was saying 26 over here, 1 on the other side, but 26 minus 5, that is 1, that is equal to 25. Apart from that, over here, you will have cash sales and credit sales. We are not going to take cash collections. We are going to take credit sales over here because there may be bad debts, there may be discount, there will be other expenses. So how will you calculate credit sales? Well, you will prepare a debtors account. Like you did earlier, if I were to prepare a debtors account, your opening debtors were 12,600. During the year, there was a credit sale of 28,400. Okay, so that is given to us, credit sales of 28,400. Then there was a collection of 28,500. There was a bad debt of 600. Allowances and discount to the customers of 200 and 1,400 respectively. Apart from that, there were certain goods returned by the customers worth 500, and hence if I take the closing just for my reference, 12,600 plus 28,400 minus 28,500 minus 600 minus 200 minus 1,400 minus 500, I should be getting 9,800. By the way, in this case, spoon feeding has happened and they've given you credit sales, they've given you closing, but even if they had not given, you could have found it. So over here, you'll have credit sales for 28,400 and the balancing figure, if any, will be giving you the profits. If there's a good return from the customer, you'll subtract that from the credit sales, and only the net credit sales will be recorded. In your debtors account, as you prepared over here, 12,600 and credit sales of 28,400. Apart from that, everything else, allowance, discount, bad debts, goods returned, and cash collection will land up to 9,800. So you prepared the stock account, you prepared the debtors account. But you also have to prepare the branch expenses account. So over here, there are certain branch expenses which are paid, like salary, rent. A lot of these expenses may be paid by the head office, but these are expenses. Now, beyond this, there are certain other costs which were not reflected. Why? Because you did not take cash collection here. You took the credit sales. So something like allowance, something like discount, something like bad debts will come over here. One hidden adjustment, which is particularly what students miss out, is when you look at the opening petty cash, this is 200, closing petty cash is 100, which means during the year, 100 must be the petty cash expenses, which automatically gets reflected in the branch account because your opening and closing comes over there as 200 and 100. However, the stock and debtors method, this will be separately shown as petty cash expenses worth 100 rupees. And as a result, this will be your total expenses of 10,500. Now, when I prepare my branch, profit and loss, I will start with the gross profit. That is 19,900, and from that subtract 19,900 minus 10,500. That is again coming to 9,400 only. However, this gives you a much more detailed accounting as compared to merely having a separate account, which is the case in case of a debtors method. Now, another method which was the trading and profit and loss method. Now, in the trading and profit and loss method, what happens? Well, you will start with the opening stock, which is 7,000, closing stock, which is 6,500. During the year, there are certain goods sent to branch, and there were certain returns, all said and done, 26 minus 5, 26 minus 1, that is 25,000. Then there were credit sales and cash sales minus returns by the customers of 500 rupees. So credit and cash sales minus the returns, and this will give you the sales. That comes to exactly 19,900, which is your GP. Instead of preparing a stock account, this is a better that you're preparing the trading account. And then instead of having a separate branch expense, you'll have all the expenses directly taken in the P&L over here, which is allowances, discounts, bad debts, salaries, rent, sundry expenses, and even petty cash expenses, and this will come to a net 9,400. So over here, this is a good question, I would say. When you revise this question, question number 3, I believe, all the branch regular debtors method, stock and debtors method, as well as trading and profit and loss method does get covered. Perfect. So after this, we'll go to question number 4. So let's go to question number 4, please. So before you do question number 4, there will be an adjustment on loading. Loading means the goods of 100 rupees are sold by the head office to the branch or transferred from the head office to the branch at 120. That is the invoice price. Now in this case, in question 1, 2 and 3, what you have done is the goods were transferred at cost only. However, it is very much possible that you decide to transfer the goods at the invoice price. 100k goods are transferred, for example, at 120 rupees. In which case, when you record the stock will be based on what I have received, that is at the invoice price. Goods sent to branch will also be at the invoice price. And then you'll record sales. Now, usually sales should be at the invoice price. But how will I calculate the GP? For which I'll prepare a separate account called as the branch stock adjustment account. So what will happen over here is, I will have, for example, let's say my opening stock is nil. During the year, goods worth 120 have been transferred. But out of that 120, 20 is a profit element. So that 20 will be credited to the branch stock. So your entry would be, for example, branch stock account debit 120 to branch stock adjustment account 20 to goods sent to branch 100. So these are goods costing 100 transferred at 120. 20 is the profit which is taken in the branch stock adjustment account. Now there can be sales. If the sales are made at 120 only, there is no further profit or no further loss. However, if the sales are made at a price which is different than the invoice price, for example, 10 rupees, difference, this 10 rupees is excess profit as compared to what we thought would have been recognized, and hence this 10 rupees will also be transferred to the branch stock adjustment account. The balancing figure in the branch stock adjustment account will be representing the profit. Now it is possible that only 50% of the goods have been sold. It is not necessary that the entire goods have been sold. 50% of the goods have been sold, for example at 65 rupees. The remaining goods remain unsold, or let's say the 50% of the goods have been sold at 60 rupees. The remaining goods remain unsold, that is at 60. So 60 will represent the stock. Now if I do the workings over here, there will be no further profit or loss. However, it appears that 20 is a profit, but out of this 20, not the entire profit is realized. Half of this is realized, half of this is unrealized, and hence you create a stock reserve. So you will say out of this 60, 60 is equivalent to 120, that is 100 plus 20. So if 60 is 120, then 20 is how much? What is the unrealized profit? That is 10. So this will be stock reserve, and hence you will create a stock reserve, and after that whatever is left over is to be taken as the profit. So that is something that you have to be a little more careful about whenever there is a profit margin involved. So if you look at questions where there is transfers at invoice price, maybe in the debtors method or maybe in the stock and debtors method. Under this method there is a single account which is prepared, that is a branch account. This is when I said branch stock adjustment account, that branch stock adjustment account is prepared in case of stock and debtors method. In case of debtors method, there is a single account only. This account will be a combination of all accounts like the branch stock, debtors, cash. In case the transfers are happening at invoice price, we usually show the invoice price in the branch account, and a separate branch stock account, adjustment account, will be created for the loading or the profit element. Under the branch debtors method, no separate account will be prepared. Instead, entries will be affecting the adjustment account will also be directly passed in the branch account only. Like in stock and debtors, you will prepare a separate account because for everything you prepare a separate account there. But in case of debtors method, you will not prepare any separate account. Everything will be done in the branch account only. And the opening and the closing stock or the balance of the adjustment account, that is the stock reserve, will also be recorded as the opening balance in the branch account. Now when we look at normal and abnormal loss, we'll see that probably in some time, but for the timing let us review question number 4. On similar lines there will also be question number 5. Like 4 ke baad 5 is as take illustration 4, prepare branch account following the debtors method, whereas in 5 at the end they say show the necessary ledger accounts in the books of the head office and determine the profit and loss of the branch for the year ended 31st December 11. So maybe your necessary ledger accounts, multiple accounts, so you will use the stock and debtors method. So let us review this. Harrison of Chennai has a branch at New Delhi to which goods are sent at 20% above cost. This was not there in the earlier problems. So this is sent at 20% above cost. The branch makes both cash and credit sales. Branch expenses are met partly from the HO and partly paid by the branch. The statement of expenses incurred by branch every month is sent to head office for recording. Following details are given below. For 31st December 11, cost of goods sent to the branch, this is 2 lakhs, but they must be sent at a 20% markup, and hence invoice price of these goods will be 2,40,000, and hence 40,000 will be your loading element. So in the goods sent to branch, in the branch stock account you will have 2,40,000 and branch stock adjustment. So you will have goods sent to branch 2,40,000, and in the branch stock adjustment account you will have 40,000, the profit element. Goods received by the branch till 31st December. Now this is at invoice price, this is 2,20,000. Now ideally they should receive goods worth 2,40,000. If I am giving goods worth 2,40,000, they should receive goods worth 2,40,000. But they have received goods worth 2,20,000 only, which means the remaining 20,000 must be goods in transit. Again at invoice price, but a part of closing stock, that is goods in transit. Credit sales at invoice price 165, cash sales at invoice price 59. Both of these will be credited in the branch stock account. Credit sales 165, cash sales 59. Okay, so this is done. Cash remitted to the head office 222,500. So this will probably be impacted when I'm preparing a single branch account. In the stock and debtors account, maybe this does not have a separate impact. Maybe if I'm preparing a cash account, it may. Expenses paid by the HO. This is 12,000. This is branch expenses. This will go in the branch expense account. 12,000. Bad debts written off. Again branch expenses, and also in the debtors account. Balances on 1st January 11 are 25,000 stock at cost, but your opening balance you will show at invoice price, and hence plus 20% comes to 30,000. So your opening balance of stock will be 30 and the balance in the opening stock reserve will be 5,000. So as you can see, opening balance 30 and opening balance in the stock reserve another 5,000. Closing is at 28,000. Now if I have to find the unrealized, 28,000 is the stock in hand, plus there is 20,000 in transit. So maybe there is a stock worth 48,000. So the closing balance will be stock worth 48,000. Okay, so if cost is 100 plus 20 and this comes to 120. So this is 20 by 120 and hence this is 48,000 divided by 120 into 20 comes to what? 8,000. So this will be your stock reserve. So your closing stock will be 48,000 with a stock reserve of around 8,000. As you can see, closing stock 48,000 total of these two and a stock reserve for the same at 8,000. Okay, then apart from this, there will be closing debtors and opening debtors, cash in hand and closing. So maybe we'll try to prepare the debtors account. In the debtors account, your opening debtors will come to 32,750. During the year, there will be certain sales, maybe credit sales at 165. Then there will be some collections. I don't know what the collections are, but closing is 26,000. There will be some bad debts worth, how much is that? 750. So over here, when you look at the debtors account, in the debtors account, 32,750, 165 credit sales, 750 for bad debts, closing is 26 and 171. This is 171 received in branch cash. So over here, when you look at your branch cash, your opening balance was 5, closing balance was 2,500. During the month, you must have collected something from the debtors, that is 171. You must have also collected something on cash sales, 59 and 171. Apart from that, you paid expenses. We don't know how much is that, but let's say that is balancing figure. And you remitted something to the head office. So to find the branch expenses which are paid by the branch, in the beginning they've told that expenses paid are paid by the branch as well as the head office. You prepare this account and see that 10,000 must be the expenses. So your total expenses include 10,000 over here, 750 on account of bad debts and another 12,000 which is paid by the head office. All said and done, there's a 22,750 of expenses. So if you want to calculate the profits, well, over here, when you prepare the branch stock account, ideally the branch stock account should tally, but there's a difference of 2,000. Now this must be excess over invoice price. So maybe invoice price is 120, you sold it at 122, then the 2 rupees excess will be separately recorded because 20 has already been recorded. The 2 rupees excess will be separately recorded. This is branch stock. This is excess of actual selling price over the normal selling price, and all said and done, you will have the gross profit 39,000, from which you will subtract 22,750 of expenses, 39 and 22,750 of expenses, and the net profit will be 16,250. This pertains to the stock and debtors method. If I want to do the work using just the debtors method, you will start with your opening. In this case, you will have the opening stock, opening debtors, opening cash, everything recorded in the branch account only. So your opening stock was 30,000. Along with that, the loading opening of 15,000. Similarly, the debtors 32,750, cash of 5,000. Everything is recorded over here. In the closing, you know that the stock is 48,000. Debtors you know, are this is 20 and 28, 48,000. Debtors are 26. Cash is 2,500. Again, against this 48,000, there will be a 6,000 stock, 8,000 stock reserve. That will be your closing balance. Now, apart from this, when I prepare the branch debtors account, I will only take the cash which is remitted. I will not take the cash sales. I will not take the cash collection. I will take the cash which is remitted, which is 2,22,000 and something, 2,22,500. Apart from that, there will be certain goods which are transferred. What 2,40,000. Samne there will be a 40,000 profit margin. There will be 12,000 which is paid by the head office for the branch. There may be other expenses. However, we will just record the transactions between HO and the branch or paid by the HO on behalf of the branch. So this is 12,000. Sir, but we have also figured out 10,000 is paid, but that is paid by the branch directly. And hence when this cash balance changes, the effect automatically gets incorporated. And all said and done, you see the balancing figure is 16,250, which is exactly on the same lines as what we discussed earlier. So these are the top 3 methods. Now, Institute has also included one more method. To be honest, we'll go to another question, chalo. But if you look at question 6 and 7, they've introduced another method as well, which is called as a wholesale price method, where the branch may be, let's say like a retail store, and the head office is like the manufacturer who is selling goods to the wholesaler at the wholesale price. So the wholesale price margin is to be recorded by the manufacturer, and any excess beyond that up to the retail price is to be accounted by the trader. So that is for 6 and 7. We'll do that in some time, but before that, let us say we go to question number 8. Let us review this. Lal and Company of Jaipur has a branch in Patna to which goods are sent at 20% above cost. Same as the earlier problem. The branch makes both cash and credit sales. Branch expenses are paid directly from HO, and the branch has to remit all the cash received into its bank account of the HO. Branch does not maintain any books of accounts but sends monthly returns to the head office. It's a dependent branch case. Following further details are given for the year ended 31st March 2020. All of that data is given, and last में देखो क्या किया? Prepare necessary ledger accounts in the books of the head office by following the stock and debtor method and ascertain the branch profit. Necessary. In debtors method, there is a single account. Trading and profit and loss account also single. In necessary accounts have to be prepared in the stock and debtors method. So when I look at the stock and debtors method, I will start goods received from head office at invoice price. This is 4,20,000. Acha, what is the loading in that? 420 divided by 120 into 20. I believe 70,000 will be the loading that will go in the branch stock adjustment account. Goods returned to head office at invoice price. This is 30. But इसमें से भी loading होगा जो reverse करना पड़ेगा. There will be a 5,000 loading on this which will have to be reversed. Both of these will go in the branch stock adjustment account. So this is branch stock adjustment. This is branch stock debit, branch stock credit. Cash sales for the year 1920. This will go in the branch stock account. Credit sales for 1920. Again in the branch stock account, credit. The credit sales will also go in the branch debtors account. Stock at branch on 1st April at invoice price 36. So this is 36 divided by 120 into 20. There must be an opening stock reserve to the extent of 6,000. This will impact the branch stock adjustment account. Sundry debtors at the Patna branch on 1st April. This is your opening debtors 48,000. Cash receipt from debtors. This will impact the branch debtors account. Branch debtors account. Discount allowed to debtors. Branch debtors. Goods returned by customer at the Patna branch. This will impact the branch debtors. In my opinion, this should also impact the branch stock, because over here this will increase the stock with the branch. Bad debts written off. Branch debtors. Amount recovered from bad debts previously written off as bad. We will see what is to be done here. Rent and rates and taxes at branch. salaries and wages, office expenses. All of these, if I go to see, these are expenses which are clearly told paid by the head office. So this will impact the branch expenses and the branch cash and stock at the branch at cost price 62,500, on which 20% or 12,500 will be your closing stock reserve. So you have to prepare the necessary accounts. If I were to review this, so I start with 36,000. इसके ऊपर हमने बोला opening reserve of 6,000 during the year 4,20,000 minus 30 net ही कर दिया, that is 3,90,000. इसके ऊपर net stock reserve 390 divided by 120 into 20 65,000. अच्छा, हमने क्या किया? We said that okay, there was 70 and there was 5, net करेंगे 65 ही हो जाएगा. It is one and the same. Next, you have goods returned by the customer. So this will impact the branch debtors as well. Goods returned by the customer. This will impact the branch debtors. Now, other than that, you recorded credit sales, cash sales. Closing 75,000. Stock is 62,500 plus 20%. And there will be a stock reserve of 12,500. Whatever is left over will be the profit. I believe all of this has been taken, but there is still a balancing figure. This must be 47,000. You must have sold at a price which is greater than your invoice price. So this is 47,000, and hence this is by branch stock. This is excess over the normal selling price, and hence this will be taken. Aja, next, when you look at branch debtors, I believe I don't have the balance of the debtors, but I have all of these adjustments जो मैंने बोले, opening, then credit sales, then discount, goods returned, bad debts, everything. Now the problem is there any cash remittance mentioned anywhere? Cash received from debtors 2,19,000 is mentioned, and as a result this will give you the closing balance. Other than that, you will have the branch expenses, which includes discount, bad debts, all of these three expenses, and there will also be a cash bank. This is bad debts earlier written off, which is now recovered, and there will be some closing cash bank balance. You are preparing the necessary accounts. The closing branch P&L branch expenses will go to the branch P&L. So you would have recorded 1,05,500 gross profit minus 58,600 expense, and hence the net profit comes to 46,900. This is question number 8. Now you can touch upon question 9 and so on, but before that, question 6 and 7. This is based on a method which is a different method called as the wholesale price method. In this case, you will record the transactions at the wholesale price, do the working in a similar manner, but you are treating the branch as a retail store, whereas what does a retail store do? The retail store buys the goods from the manufacturer at the wholesale price and sells it to the customer at the retail price. So the branch over here under the wholesale, sir, how will we know? In the exam the question will tell you wholesale price, etc., and a separate retail price, in which case you will have to take the same. In earlier problems, you did not have a separate wholesale price and a separate retail price. There was an invoice price, and that's about it. But if you see question number 6 या फिर question number 7, there is some different adjustments over here which are possible. Let's review. It's a different method. Following is the information of the Jammu branch of Best New Delhi for the year 31st March 12. From the following data, goods are invoiced to the branch at cost plus 20%. So if the cost is 100 plus 20% will come to 120. The sale price is cost plus 50%. This is 100 plus 50%. This is 150 would be the sale price. So 20 would be the profit for the HO. The remaining 30, that is 150 and 120 के बीच में का difference will be the profit for the branch. Other information, stock on 1st April at the invoice price 2,20,000. Goods sent to the during the year 11 lakhs. This is for the retailer. This is a cost. Cost is the wholesale price or invoice price at which you are buying. A manufacturer may make the goods at 100. The manufacturer will give it to the wholesaler at 120, and that they will sell it at 150. Sales during the year is 12 lakhs, but sales must have happened probably at 150. Expenses incurred at the branch is 45,000. Ascertain the profit earned by the branch during the year and the branch stock reserve in respect of the unrealized profit. Okay, so when I look at this, you'll have an opening 2,20,000. Stock goods sent during the year. This is 11 lakhs. Now the problem is I don't know the closing stock only. I don't know the closing stock. But I know that the sales were 12 lakhs. Now if 12 lakhs divided by what? 150 into 120. So this will be your cost of goods sold. 12 lakhs divided by 150 into 120. Maybe 9,60,000 would be your cost of goods sold. Acha, if I had to find the GP, the gross profit, this will be 1,20,000 divided by 150 into 30. Can I say 24,000 will be the profit? 12 lakh divided by 150 into 30, 2,40,000. 2,40,000 will be the profit. 12 lakh is the sales, which means you can find the balancing figure as a closing stock. So if I look at the closing stock, 220 plus 11 lakh plus 2,40,000 minus 12 lakh. So this is 3,60,000. There are other ways in which you can also solve. So over here you have taken everything. Invoice price. But this is actual sale price. So if I go to see, यहाँ पे देखो, if I do 220 plus 11 minus 360, I'll get my COGS at 9,60,000 and hence 2,40,000 is my profit. इसमें से I'll later subtract 45,000 to get net. So this is 2,40,000. I subtract 45,000. 2,40,000 minus 45,000 and I'll get 1,95,000 as my final profit. So this is probably 1,95,000. Now they ask you to find the stock reserve in respect of the unrealized profit. So this is 3,60,000. Now this is 3,60,000 at invoice price. Invoice price is 120. And if I want to find the stock reserve, this is 3,60,000 divided by 120 into 20. 360 upon 120 into 20. I believe this must be 60,000. Remember, 3,60,000 is the invoice price. In 3,60,000, only profit of 20 is sitting. Profit of entire 50 or entire 30 is not sitting. Only profit of 20 is sitting. So if I look at, ये तो question 7 हो गया. If I look at question number, I think 6 किधर चले गया यार. So I'm not sure if I can find 6 over here handy. किधर और ही है. But nevertheless, acha, there you go. Question number 6. So you will have cost is 100. Ultimately invoice price is 120. Sale price is 150. Gross profit will be 2,40,000. This is based on 30. 30 is nothing but 150 minus 120. And 195 is your profit element. Acha, after that, if I look at closing stock, वो 3,60,000 निकलेगा. 3,60,000 will be at invoice price because opening stock and purchases are at invoice price. And उसके अंदर is a profit of 20 which is sitting. And hence this is 60,000. We have done this behind because this is a separate method called as the wholesale price method. Fair enough. If we go back to question number 7. So I think question number 6 we have discussed. This is on wholesale price method, only to be done if the question specifically requires. Like they give you a separate retail price and a separate invoice price, only then will you do this adjustment. Next, you go to question number 7. Selwell, who carried on a retail business, opened a branch X on 1st of January 2011, where all the sales were on credit basis. So what is Selwell doing? Retail business opened a branch on 1st January, where all sales were done on a credit basis. All the goods required by the branch were supplied from the head office and were invoiced to the branch at 10% above cost, which means 100 ka cheez being sold at 110. Is there a separate wholesale invoice price and a retail price given? Not as of now, and hence you don't need to follow the wholesale method. The following were the transactions: January 11, February 11, March 11. 3 महीने के transactions देखे रहे. Goods sent to branch at the purchase price would be what? I think 1,50,000. But this is at the purchase price. If I want to record it, well, this will be at plus 10%. So 165 and 15,000 will be the loading. So if I look at question number 7, I will see goods sent to branch. Can I say total of 165, that is 1,50,000 plus 10%, and in my branch stock adjustment account. अच्छा यहाँ पे you are preparing using the debtors method, in which case over here you will have buy goods sent to branch 15,000 loading में यहाँ पे चले जाएगा. Sales as shown by the branch monthly report 1, 2 and 3. This is the credit sales. However, if I am following the debtors method, I will take the cash collection. Cash received from debtors and remitted 20, 51, 35. If I do 20, 51, 35, I will say 1,06,000 is my cash collection and remittance. However, 38 plus 42 plus 55, 135 is my sales. Acha, returns to HO. Invoice price to branch 1, 2 and 3. Acha, there is a separate 1,200 plus 600 plus 2,400. This is returns to HO. This will reduce my stock and hence I'll have 4,200 on the credit. But this is at invoice price. So divide by 110 into 10, maybe 382 will be the loading on this, which is reversed. So over here you will credit 4,200. Samne you will credit 382 of the loading, which needs to be reversed. Okay, over here you'll have cash and bank 1,06,000. In the debtors method, you will take only the cash which is collected, which is 1,06,000. अच्छा, अभी और कुछ बचा है क्या? Sir, the stock of the goods held by the branch was 53,400 at invoice to the branch. 53,400 divided by 110 into 10. This will give you stock reserve. 53,400 divided by 110 into 10. Maybe 4,855 will be your stock reserve. So closing में you will get the stock 53,400, 4,855 the stock reserve. Record these transactions in the HO's books showing the balance on 31st March 11 and the branch gross profit for the 3 months ended. Now we don't know the balance of the debtors. So over here, if I go to see, is there any opening debtors given? No. However, during the year, there was a 1,35,000 sales, out of which 1,06,000 was collected. There's nothing given regarding bad debts. Further, there was 4,200 of goods which are returned, and then जो बचा हुआ है 135 minus 106 minus 4,200. I believe 24,800. Credit sales. Acha, sorry. This is not goods returned by the debtors. This is goods returned by the entity to the HO. This is not returns from the customer, and hence ये आपको नहीं लेना है 4,200 last वाला. This will be at 29,000 only. Perfect. And that is, I think, about it. So there's nothing much over here. This is question number 7. Now you will have question number 9. We'll just review that once, just a second. And 10 भी ये wholesale price ऐसा ही method पे है, तो we'll just review this once. So question 10 we'll do first. This is also on similar lines of that wholesale price method. There are only 2 questions, I think 6 and 10 on those lines. So let us review this. So you can mark those questions for wholesale price. How will we know? Well, the question has unique distinct data as compared to other questions. Mrs. Rahul operates a number of retail outlets to which goods are invoiced at wholesale price. As you can see, they clearly mention that goods are invoiced at wholesale price, which is cost plus 25%. So wholesale price or invoice price, if your cost is 100 plus 25, that is 125. These outlets sell goods at retail price, which is wholesale price plus 25%. So 125 plus 20%. This comes to maybe 150. Following is the information regarding one of the outlets for the year ended 31st March 12. This is for the outlet individually. Stock at the outlet at 1st April 11. This is 30,000. This will in all likelihood be at the wholesale or invoice price. Goods invoiced to the outlet during the year 3,24,000. This will also be at the wholesale or invoice price as a case may be. The gross profit made by the outlet is given to you as 60,000. Now this is the gross profit which is given by the outlet. So over here, all of this is at invoice price, but this is gross profit given. Now if I look at the outlet or the retail outlet, they will say I must have sold at 150 and I procured at 125. So over here my GP as such, my gross profit would be 150 minus 125, that is equal to 25 rupees. Now if 25 rupees is equal to 60,000, then 150 is how much? If I want to calculate the sales, 60,000 is equal to 25, then 150 is how much? I believe 3,60,000 will be my sales. I'll have to prepare a separate working for it. Now there must be some goods which are lost by fire. So this will be the balancing figure in my trading account if I can find the sales, if I have the opening stock, if I have goods invoiced during the year, even if I have the closing stock. Brilliant. Stock at the end of the year, 36,000, I have that, which means if there is any balance, that will be due to goods lost by fire. And expenses for the outlet is 20,000. So if I were to prepare like a trading account or the outlet stock account, my opening is 30,000. During the year, 3,24,000 has been invoiced. Sales were 3,60,000. Closing stock 36,000. GP is 60,000. If I were to subtotal this, 30 and 324 and 60, 414 minus 360 minus 36 will probably come to 18,000. This must be the invoice value of the goods lost by fire. 18,000. Aja, you are required to prepare the following accounts for the year ended 31st March 12. Outlet stock account. This is like the outlet stock account. The outlet profit and loss account. In my outlet, I would say 60,000 was there. Other than that, there will be an expense of 20,000. So 60 minus 20, that will come to a net profit. However, there will also be an 18,000 loss by fire. Over here in the stock account, I've said 18,000 stock is getting burned, but at the same time, that is a loss. So when I prepare my profit and loss, I might say in my profit and loss that my GP at the beginning is 60. Out of this 60, so this is, let us say 60,000, I will book expenses. Maybe expenses are worth 20,000. I will book 18,000, which is a loss, and then 60 minus maybe 38 for the outlet. For the outlet, 22,000 is the profit. Someone might say that no, but the manufacturer is selling 100 kgs at 125. For the outlet, it is buying at 125. So on the base of 125, for the outlet, there's a 22,000 net profit. So if I were to verify this, as you can see over here, 3,60,000 will be my sales. I'll back calculate it. Goods lost by fire is 18,000. Outlet profit and loss, I got down 60,000. Expenses of 20 and goods lost by fire of 18, and 22,000 will be my net profit. And what is the last thing? The stock reserve. So if I have to create, for example, a stock reserve, in the opening I would say 30,000 divided by, this is at wholesale price. अच्छा 25, ये कौन सा 25 है? 125 and 100 के बीच में का डिफरेंस. स्टॉक रिजर्व इज क्रिएटेड बाय द एचओ, नॉट बाय द ब्रांच. एचओ सेज ओके, इन लोग बोल रहे इतना प्रॉफिट कमाए, हावेवर आई हैव सोल्ड गुड्स एंड these goods are given to my own branch. 100 ka is at 125 and hence 30,000 divided by 125 into 100 into 25. Maybe this is opening stock reserve of 6,000 and closing will be 36,000 divided by 125 again into 25. 7,200. So question 6 and 10, slightly different questions. You can touch upon that. 7,200 at the end, 6,000 at the beginning, and hence in the general P&L, not in the branch P&L. Remember, this will impact the company as a whole. So in the general P&L, there will be a stock reserve adjustment. In the branch P&L, this will not have any impact. So over here, this takes care of question number 10. The only question in this first 10 questions which are left is question number 9. So over here, let us go to question number 9, please. So if you read this question, you have Arnold of Delhi, trades in ghee and oil. It has a branch in Lucknow, dispatches 25 tins of oil at 1,000, 15 tins of ghee at 1,500 on the first of every month. So this is the goods that they are dispatching. The branch incurs expenditure which is met out of the collections, which is in addition to the expenditure directly paid by the head office. So some expenditure out of the collection, the branch basis, and beyond that, there's some other additional expense to be paid by the head office. Following are the other details. You have Delhi data and Lucknow data. So purchases of ghee. So there is quite a few bit of expense. I think you are asked to prepare the branch account and also trading and profit and loss account excluding branch transactions. We'll probably try to review this along with in the next session, maybe over here. So maybe we'll keep question number 9 to be discussed along with the next session. I'll also discuss independent branches, and along with that maybe we can discuss question number 9 as well. So over here, this kind of largely looks at quite a few problems. We'll continue these problems into the next session as well. So I'll just continue this in the next session, please. Okay, so we'll continue with the branch accounting section. In the last class, we had to cut off at question number 9. So let's get started from there again. So let us review question number 9. Arnold of Delhi trades in ghee and oil. It has a branch in Lucknow. He dispatches 25 tins of oil at the rate of 1,000 per tin and 15 tins of ghee at 1,500 per tin on the first of every month. So there are 12 months. So when I look at oil and ghee, 25 tins of oil. So this is 25 into 12 months into 1,000. So probably this will come to around 3 lakhs. Whereas when I look at ghee, this is 1,500 and this is, I believe, 15 tins into 12 into 1,500. So if I do 180 into 1,500, comes to 2,70,000. This will be the goods sent by the HO to the branch. The branch incurs expenditure which is met out of its collections, which is in addition to expenditure directly paid by the head office. The following are the other details. So you will have purchases. This is done by the Delhi. Now Delhi is the head office. I think branch is in Lucknow. So over here there is purchases of ghee worth 14,75,000. Out of this, I can say some of the ghee is transferred to the Lucknow branch. So can I say around 2,70,000 of ghee is transferred to the Lucknow branch. Next, you will have oil, and again out of this oil, around 3 lakhs of oil is transferred to the Lucknow branch. So in the books of the Lucknow branch, there will be a 2,75,000 and 3 lakh rupees of ghee and oil coming in. Okay. Next, There are certain direct expenses. This is incurred in the Delhi column. Expenses paid by the HO. Now this is in the branch column. Sales, again the HO and branch for ghee and oil. Collection during the year, including cash sales, is given in the branch, and remittance by branch to the head office is also given. So you have a lot of data over here, and then you have been given balance. This is entirely for the Delhi operation. Then you have the balance entirely for the Lucknow operation. So I think almost replica data. This is balance of oil and ghee. This is opening and closing. So this is 1st January 11, 31st December 11. Then again debtors, cash, furniture, plant, everything. Next we have the Lucknow branch. All of this data being given to you. Addition to plant and machinery on 1st January 11 is 6,02,750. And the rate of depreciation for furniture is 10%. For plant and machinery is 15%. Which is already adjusted in the above figures. So these numbers that you get for furniture, etc. is already after depreciation. The branch manager is entitled to a 10% commission after charging such commission, whereas the general manager is entitled to 10% commission of the overall company profits after charging such commission. So there is this new adjustment of commission which we will have to see. General manager is also entitled to a salary of 2,000 per month, and general expenses incurred by the HO is 24,000. Now what is asked? It's a very different thing that is asked over here. Prepare the branch account in the head office books, and also prepare Arnold's trading and profit and loss account excluding branch transactions. So there are two things. First is you are going to prepare the branch account. It is like the branch debtors method. For example, you are going to prepare the branch account in the head office books, where you will take the transactions between head office and the branch, or between the head office and a third party on behalf of the branch. Next, you are going to prepare Arnold's trading and profit and loss account, but this is excluding the branch transactions. So over here, any transactions that have been done with the branch will not be included over here. This will be excluding the branch transactions. It is just a direct branch profit that you will directly incorporate. So when I look at the branch account, in the head office books, so I will look at Lucknow branch. In the beginning, you will have 17,000 and 27,000 worth of opening stock, and then 13,250 and 44,750 worth of closing stock. Now other than that, you also have debtors 75,750. Closing you don't know, we'll have to find. Cash on hand 7570 and furniture 6250. So these are all opening balances. Similarly 12,350, similarly 5625. Now only thing you have to figure out is the debtors over here, and other than that there is some goods sent to the branch. So when I calculate the goods sent to, this is your total opening balances, debtors is still remaining. Goods sent to the branch would be, I believe, 2,70,000 and 3,30,000 or 3 lakhs for oil and ghee. Apart from that, if you go to see expenses paid by the HO 14,250, there will be a 14,250 to bank over here, and there would be sales. Now sales are there. However, for branch you will take collection during the year, and then what is the remittance by the branch to the head office. So I think over here you will take the transactions between the branch and the head office. So this is 6,13,250. Now the only thing that is remaining is debtors. Now when I prepare the debtor account, your sales will be 3,15,730, on which this is for oil 342. So this is 342 750 and 315 730. So this is your total sales. We are assuming these are on credit. No, these are your total sales. Now on the other side you will have cash collections. So there is opening debtors of 75 750 and minus collection, which is 647 330. Other than that, I don't think there is any bad debts, etc., and hence there is an 86,900 balance if I am not wrong. So if I look over here in the memo debtors account, I have taken the opening balance of 75,000 during the year sales. There is no other bad debts or discount. So this is your cash collection, and 86,900 bang on. This is your balance. Now when I look at the debtors, this will be 8600 coming from the working out. Everything else is given to us, and hence this is 162,875 in the opening. This was 1,33,540. During the year, there will be some goods sent to branch 3 lakhs, as well as for ghee 2,70,000. Some expenses paid of 14,250. Now, if you are preparing the branch account, this is the branch debtors method. Cash bank will be the remittance that will be there. Now, if you sit and calculate the net profit, this will be around 58,335. However, there's some branch manager's commission as well. Now, this is 10% of the net profit after deducting that commission. So, if your total profit is 100, out of that 100, 10% will be your commission. So, if I look, let the net profit after commission be 100, commission will be 10% on that, and hence the net profit before the commission will be 110. So, I can say 58,335 divided by 110 into 10 comes to 5303. This will be your commission. As we have seen the working over here, we will have branch manager's commission to be 5303 and the remaining net profit being 53,032. So, to be honest, if you remove the branch manager's commission adjustment over here, this is similar to a regular branch account or branch debtors method. Now, the next thing over here is slightly new, where they're asking you to prepare Arnold's trading and profit and loss account, but excluding branch transactions. So, for the branch transactions, you will directly record a net profit, because for the company as a whole, that will also contribute. So, you will take, when you prepare the trading and profit and loss account, you will take the opening stock, but these will be opening stocks from here 150, 350, maybe 5 lakhs, closing stock 3,12,500 and 417, 250. Now, this is 729, 750. This is closing stock. Whatever are the sales, you will take the entire sales 1846 and 2741. That will give you your entire sales. Now, there is no other loss, etc., and hence you can try to find the gross profit. So, this is entire sales, entire closing stock, opening stock. Now, the problem is when you have the goods purchased during the year, you have data regarding purchases as well. So, when you go to see, there would be data regarding purchases for ghee as well as purchasing for oil, and there are some other direct expenses. So, from this, because it is excluding branch, we will remove the goods sent to branch. So, as you can see over here, minus 2,70,000 removed, minus 3 lakhs removed. Because it is direct expenses, this will impact the gross profit as well, and hence this will give you the gross profit. This is other than the branch transactions. But when you calculate the overall general profit, in that even the branch profit will be included, and then there are other expenses which may be included over here and which may be incurred, like depreciation. There would be certain depreciation on the furniture and on the plant. The rate of depreciation, because you're preparing the trading and P&L account, is 10% as well as 15%. So 10% of 21,500, this is 2150, and for plant 307, 250, and another 602, 750 purchased into 15%, 136, 500. Okay, branch manager's commission and everything is taken, but there is general manager salary 2,000 per month into 12, that is 24,000, and head office expenses. So over here, if you go to see, you will have head office expenses of 24,000, salary of 2,000 into 12, that is also 24,000, and then there is a general manager commission. This will be worked out in the exact same way. Like over here, if you take 24 and 24, you will have total profit 597,075 plus 53,032 minus all expenses 2150, 136,500 minus 24 and 24. So this is your total expenses. This is your total profit, which comes at around 463, 457. Now 463, 457 will be equal to 110, because this is before the commission. 10% is charged on the profit after commission. So this is 110, in which case 10 is how much? 42,132, and the remaining is the profit. So this kind of takes care of question number, I think 9. It's a fairly good question. Before you go to the next question, there is this, we can actually do another question. This is question 19, a fairly easy question, which is pertaining to, I believe, calculation of commission again. So if you review 19, nothing much over here. So since we have done a commission adjustment, we'll quickly review question number 19 and then go to the concept of normal and abnormal loss. Now Alpha has a retail shop under the supervision of a manager. Great. The ratio of gross profit to the selling price is 25% throughout the year up to 31st March 2027. The branch manager is entitled to a commission of 10% of the profit of its branch. This is 10% of the profit calculated before charging his commission. The last question we had done, 10% of the profit after charging commission. This is before, subject to a deduction from such commission equal to 25% of any ascertained deficiency in the branch stock. Deficiency can be something like a shortage from branch stock. All goods were supplied to the branch by the head office. Following are the details for the year as follows. So this is opening stock at cost, perfect. Goods sent to branch, again at cost, okay, looks great. Sales will come on the other side, 361 280, but ये sales का gross profit भी निकलेगा 361 280 into 25%. GP would be 90,320. Manager's commission paid on account, this is just paid. Chargeable expenses 49,120, and then closing stock, which is at selling price. Now you have been given 25% of the gross profit. So if I want to find closing stock at cost, I will do 123 328 minus 25%, which is 92 496. Now if I prepare the trading account, you will have 74 736 opening stock plus 289 680 goods sent to branch. Aja. Other than that, there will also be a GP actually of 90,320, and then on the other side there will be sales of 361 280, and then there will be closing stock of 92 496. There's a 960 difference. Now this must be deficiency, maybe goods lost due to pilferage, fire, whatever it is, but this is 960 of deficiency. If you're not very clear, I'll just pull that up onto your screens so that you are absolutely clear with this adjustment. Over here, when we do this, question number 19, this is your branch trading and profit and loss account. You take the sales, closing stock, which is at cost, opening stock, goods sent to branch, GP is calculated, but after doing this, your trading account does not tally, and hence 960 is a deficiency. Now this is like a loss. You will record it in the profit and loss account. You will take the GP 90,320. There will be some chargeable expenses worth 49,120, and there is another deficiency worth 960. Now what you are left over with is 90,320 minus 49,120 minus 960. This is 42,160. On this there will be a commission. This is charged at 10%, or I think 10% here, yes, into 10%. This is 4216. However, from this, whatever is a deficiency, you are penalizing the manager. 25% of the deficiency will be deducted. 4216. Okay, how much is that? 4240, sorry. 9320 minus 49,120 minus 960. I forgot that. 40,240 into 10%. 4024 minus your deficiency. 960 into 25%. 240. You're penalizing the manager, and hence 3784. Out of which 2,400 is paid on account. Remaining 1384 is yet to be paid. So this takes care of question number 19. Another question which you can actually touch upon, and there's nothing much per se other than that, is question number 21. So if we can just review question number 21 over here. So let us touch upon question number 21. Again, this is on, I think, branch debtors method from the following particulars relating to Pune branch for the year ended 31st December 18th. prepare the branch account in the books of head office. This is branch account in the books of head office, and hence this will be like the branch debtors method. In this, you have branch stock at the branch on 1st January. This is opening. Debtors again opening. This is debtors closing. Petty cash opening. Furniture at branch opening. Prepaid fire insurance premium opening. Salaries outstanding, this is opening but on the credit side. Everything else is on the debit side. So if I take all the opening total 1, 2, 3, 4, 5, all debits, 14, then 500. I think this is 16,650. 16,650. Then we will see the closing, but before that, 100 will also come, but on the credit side. This time around it is opening even outstanding expenses and prepaid. Would send to branch 80,000. Take that directly. 80,000. Then you have cash sales, credit sales, cash receipt from debtors. Remember, usually what you take in the debtors method is usually cash remitted back. So over here you will have what? So you will have what over here? So we will take 80,000 and then cash sales, credit sales, so we will not take. Cash receipt from debtors, cash paid by the branch debtors directly to head office. Discount allowed, okay, that would already have been deducted in the cash received, which means if everything is remitted 1, 2 and 3, 130 plus 35 plus 2, maybe 167 will be the remittance back. Discount allowed, this will help you in calculating the closing debtors if required. Cash sent to branch for expense for 1, 2 and 3 and 4. So if you total up all of this, this is 6,000 I believe. You will take this as it is, 1, 2, 3, 4 and 6,000. Total when you look at cash sales from debtors, direct cash collection. There may be something else as well. Goods returned by the branch, 1,000. So this will be credited in the branch account. Goods returned by debtors will really not have any impact here. Stock on 31st December, you will take this in the closing. So closing में क्या आएगा? 1, if I highlight 1, then you have stock, petty cash spent by the branch. This will help you in calculating the closing petty cash. Your opening petty cash, I think, was 500. Then another 1,000 was supplied, 500 and 1,000. This is 1,500 minus 850 spent. So you are going to be left with 650 of petty cash. So debtors will be 4,900 given. Stock is 5,000 given. Petty cash 650 given. Provide depreciation on furniture at 10%, which means your furniture closing balance will be 2,000 minus 10%. This is 1,800. Furniture will be 1,800. Perfect. Okay, what next? Goods costing 1,200 were destroyed due to fire and sum of 1,000 was received from the insurance company. You will remit that, and hence 1,000 will be added into your remittances. Now the only thing which is remaining is finding the closing. Now there's nothing even regarding salary outstanding. However, your opening prepaid insurance, I think, was 150. Annual insurance up to 31st March is 600. This is up to 31st March. This is 600 divided by 4. 150 of this must still be prepaid, and that's about it. So if you find the balancing figure, this is 78,950. This will give you the net profit to be transferred. Okay, that takes care of question number 21. Also, there is another question. I think this is 26. This is on inter-branch transactions. If you logically think of transactions going from one branch to another, all the things that we have done till now is a transaction between head office and the branch. However, there can be a company which has multiple branches, one in Chennai, one in Delhi, one in Kolkata, one in Mumbai, all the metros, and all of these branches are giving goods to each other. Like if the Delhi branch gives goods to the Mumbai branch, that means in the books of the head office, which is preparing all of these accounts, I will give credit to the Delhi branch because it is giving the goods and hence it is likely to receive the money. Whereas I will debit the Mumbai branch because it has to pay for these goods. In a similar way, what I will do is later, if the Mumbai branch pays to the Delhi branch, then Mumbai branch over here will be credited because it is paying and hence its dues are being paid, whereas Delhi branch is receiving, and hence in the Delhi branch books you will debit that whatever was due to them they are receiving. This is one and the only question. If it comes on these lines, you should be probably able to tackle this. So we'll review question number 26 once. This is on inter-branch transactions. Go to question number 26 on page number 264. It's more of a common sense based adjustment here. Show the adjustment journal entry in the books of the head office at the end of April 11 for incorporation of inter-branch transactions, assuming that only head office maintains different branch accounts in its books. So all the accounts are centralized in the head office. Over here, for the Delhi branch, received goods from the Mumbai branch of 35 and 15 from Kolkata. So let us say there are 4 branches: Delhi, then Mumbai, then let's say Kolkata and Chennai, or Chennai and Kolkata. We'll just try to align it the way it is there in the solution. Chennai and Kolkata, perfect. So if I do for one branch properly, you will be able to understand for every branch. Like Delhi branch has received the goods, so it has received 35 and 15. So this is goods received by the Delhi branch. So Delhi branch becomes like a debtor, 50,000 of goods that it is receiving. But from whom? Well, from Mumbai, 35,000. From Calcutta, 15,000. That's about it. Send goods to Chennai at 25 and Kolkata 40. So when it is sending goods, it should get credit. But whoever is receiving will be debited because they have to pay. So Chennai has to pay, I believe, 25,000. Kolkata, 20,000. Bills receivable received from Chennai. So Chennai has paid, and hence Delhi is going to receive. So Chennai is paying. So Chennai will now be credited because it is paying. Chennai branch account debit to bank or to bill receivable, and I'm receiving. So this is Delhi's bill receivable account debit or payment bank account debit to what? Chennai, and hence this is 20,000 debit. I've received money. Acceptance is sent to Mumbai and to Calcutta. So I'm saying that I'm going to pay off. So to Mumbai I'm going to pay off, to Calcutta I'm going to pay off. So something account debit to bank or to bills payable. This is 25 and 10. I think 35. So to Mumbai 25,000 and Calcutta 10,000. If I can crack this, everything else will flow through. So as you can see, it is the same thing. 50 minus 35 minus 15, 45, 25 and 20, 20 and 20, 35 negative, 25 and 10 positive. Exactly the same thing as we have discussed. Now then you go to Mumbai branch. Apart from the above, you have received goods from Calcutta worth 15,000 and Delhi, which is worth 20,000. Received goods from Calcutta worth 15,000. This is for the Mumbai branch. So when I look at, let's say, Delhi, Mumbai, Chennai, Calcutta, Mumbai branch is receiving goods from Calcutta and Delhi. So Calcutta will be credited because it is giving goods. Delhi will be credited because it is giving goods. But Mumbai is receiving the same, and hence Mumbai will be debited, let's say 35. Cash sent. So payment is made to Delhi. So Mumbai is making the payment to Delhi. Delhi is receiving it 15. Calcutta is receiving it 7. And hence this is what? 22. Negative. Chennai branch, apart from the above, received goods from Calcutta. So Chennai branch is receiving goods. Plus 30. Calcutta is giving the goods. So this is credit. Acceptances and cash sent to Calcutta. So I am paying Calcutta, so my account will be reduced. 20 and 10. I think this will be total 30. So we will say minus 30 and they have received 30. And for the Calcutta branch, send goods to Chennai worth 35. So when I'm sending goods, I will get the credit. I will like Calcutta will become like a creditor. It will have to be paid, whereas Chennai, who is receiving, it will be like the debtor, so they will be debited. Paid cash to Chennai worth 15. Paid cash. So Chennai is receiving the cash and Calcutta is paying the cash. Just a second. Cash paid to Chennai. So if Chennai is paying cash, it will be debited. Calcutta has paid the cash, so it will get the credit. Acceptances sent to Chennai. This is like payment sent to Chennai. I think this is 15 and 15 still. If I'll review at the end, yes, 15, 15, credit, 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 debit, 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 as you can see over here. This is one of the only type of questions on these lines. So this takes care of question number 26. Now, if you go back again, before you proceed further, into a question involving, I think, normal and abnormal loss. So this should be a fairly interesting question, and then we can go to the concept of, I think, independent branches as well. So let me just review. 23 and 27 are two questions that we want to do over here. Yes, now there will be the concept of normal and abnormal loss. So what happens is, the generally accepted accounting practices tell you that abnormal loss has to go to the P&L, whereas normal loss will not go to the P&L separately. So when there is a normal loss, and if goods are being sent at the invoice price, so the thing is, for example, if you go to see, I think we have done a numerical over here. It's a little difficult to comprehend, but let's say you purchase 10 goods of 1 rupee, that is at 10 rupees, that is your purchases. You sold 9 units at 1.8, 1.2, and hence 10.8. Now ideally 1 unit is still remaining. However, what if it is lost? Then there is no closing stock. Now if it is an abnormal loss, then you'll have to show that in the P&L separately. However, if it is a normal loss, you don't need to show it in the P&L separately, directly net 0.8, that's it. And hence if it is a normal loss, you don't have to take any separate effect into the P&L. But your branch stock will go down, and hence your branch stock will be credited, and your profit will be reduced because of that, and hence branch stock credit, branch stock adjustment debit. So the adjustment over here for normal loss will be, you will debit the branch stock at the invoice price, debit the branch stock adjustment, so you'll reduce the profit. Like if you see over here, 1.1 minus 1, that is 0.2 rupees into 9 units, 1.8 should be the profit. However, 1 is the loss, normal loss, and hence 0.8. So for this 1 rupee, you will pass the entry, branch stock adjustment account debit to branch stock. If transactions are at cost, you will take it at cost. If it is at invoice price, you will take it at invoice price. Now, if it is an abnormal loss, then what will happen is, your abnormal loss has to be shown separately. So what will happen over here is that you will show in your profit and loss the gross profit of 1.8 and then separately show abnormal loss. So you'll show GP at 1.8 and then separately show an abnormal loss of 1 rupees, which will come down to again 0.8. Now how do you do that? Well, over here you will debit the branch P&L by the actual abnormal loss, which is 1 rupee. However, your branch stock account is maintained at the invoice price, and hence you will credit the branch stock account by the invoice price, that is, for example, let's say 1.2, and the loading, if any, will be reversed. Now, long story short, if it is a normal loss, for eliminating normal loss, your entry will be branch stock adjustment account debit to branch stock. This is entirely at the invoice price. Whereas if it is an abnormal loss, I have to show it separately, and hence the cost of the goods lost will be shown within branch P&L. So this is branch profit and loss. This is for the cost. Branch stock is still credited by the invoice price, and the branch stock adjustment account will only be adjusted by the loading. The abnormal loss will be shown in the P&L. The above solution is in line with ICI's answers. Alternative solutions are also possible, but we would prefer you do this because it is in line with the institute solutions. The alternative presentations in certain cases might actually jump up. So to better understand it, we will do a sum or a couple of problems, so you will understand this better. You will go to question number 23, please. Go to question number 23. Go to question number 23. Ayan Limited invoices goods to its branch at cost plus 33 1/3%. Cost plus 1/3. So 1/3 on cost is like 1/4 on selling price. From the following particulars, prepare the branch stock, that is point 1, branch stock adjustment, point 2, and branch profit and loss, point 3, as they would appear in the books of the head office. Vapas, what are we supposed to do? Branch stock account, branch stock adjustment account, and branch profit and loss. As they would appear in the books of the head office. Okay, stock at commencement at invoice price 3 lakhs. This will be a part of branch stock, but this is at invoice price. Your loading is 1/3 on cost, that is 1/4 on invoice price, and hence your opening branch stock adjustment account will have 360 divided by 4, 90,000. This is like your opening stock reserve or opening loading, which is there. Stocks at close at invoice price is 2,88,000. This will also go to the branch stock account. Other than that, you will have goods sent to branch during the year at invoice price, including goods invoiced at 48,000 on 31st March but not yet received before the close of the year. So by the end of the year, other than this, there will also be a goods in transit amounting to 48,000, and hence 2,88,000 plus 48 comes to 336, which will be the closing stock divided by 4, and hence I believe 84,000 will be your closing loading in the branch stock adjustment. Further, 24 lakhs, this will go in the branch stock account, and in the branch stock adjustment account, a loading which I think is 6 lakhs. On this will be taken. Return of goods to the head office at the invoice price of 1,20,000. So this will be again credited to the branch stock, and the loading on that 120 divided by 4, 30,000 will be reversed in the branch stock adjustment account. Credit sales at the branch. Okay, this will go in the branch stock account. Credit sales 1,20,000. Invoice value of goods pilfered and normal loss due to wastage and deterioration at abnormal. So pilfered, we are assuming, is abnormal, and in the next line what is given is clearly normal. So when I look at normal, your entry over here will be branch stock adjustment account debit 36 to branch stock. So over here you are reducing your stock, but at the same time any total impact, the loading as well as the profit, will entirely be removed. So just remember this effect. And when you look at 24,000, the entry over here will be branch stock adjustment account debit 6, branch P&L will be the cost, which is I believe 18, to branch stock, which is 24, and cash sales at a branch is 21,60,000. This will go in the branch stock account, and closes its books on 31st March 2018. So if I go to see over here, when you look at this question, you will have 3,60,000, as we said, loading of 90, closing comes to 336, loading of 84. Then goods sent to branch 24, on that 6 lakhs. Then goods returned 1,20,000, reversed loading of 30. During the year, you will have collections or sales of 1,20,000, even cash, I would say, cash sales of 21,60,000. Both of these would be there. Other than that, what will be there? Well, you will reverse 36 lakhs directly over here, whereas 6 and 18, 6 will go here, 18 will go in the profit and loss. Niche in the profit and loss, abnormal loss. You'll have to do some practice over here, but just remember for the timing from an exam perspective, if it's an abnormal loss, then you have to show that 18 separately, and hence that 18 will come over here. Normal loss need not be shown separately, and hence the entire 36 is knocked off from the stock, and second effect against branch stock adjustment. So after all of this, if there's any difference, it will go to the branch stock adjustment account, because this might be excess selling price over the invoice price that you must have charged on possibly the sales, and then you calculate the difference in the branch stock adjustment account, which will go to the branch P&L, and that will give you your final net profit. So here what you have written in green, which is the impact for the pilferage, which is abnormal, and the other loss, which is normal, is the only thing which I believe is a little more crucial. Next, we'll go to question number 27. Go to question number 27, please. Over here, widespread invoices goods to its branch at a cost plus 20%. The branch sells goods for cash as well as credit. Great. The branch meets its expenses out of cash collection from the debtors and the cash sales and remits the balance to the head office after withholding 10,000 necessary for meeting immediate requirement of cash. So this tells us that your closing balance in the cash account will be 10,000. On 31st March 11, the assets at the branch were as follows. So this is your opening balance of all of these assets: 10, 384, 1080, 500. This is your opening 1974. During the accounting year ended 31st March 12, invoice price of goods dispatched by head office to the branch amounted to 1 crore 32 lakhs. So if I do it in thousands, this is, I believe, 1 crore 32 lakhs divided by 1000, 13,200. Out of these, goods received by the branch sent back goods invoiced at 72,000. So this is goods returned. The other transactions at the branch are cash sales, credit sales, cash collection by branch, cash discount allowed to debtors, returns by customer, bad debt return off, expenses paid. ठीक है. On 1st January 12, branch purchased new furniture for 1 lakh, for which payment was made by the head office through a check. So this will be also going in the branch account because this is paid by the head office. On 31st March 12, branch expenses of 6,000 were outstanding and cash in hand was 10,000. Furniture is subject to 16% depreciation on diminishing balance method. Prepare branch account in the books of head office. It is just the branch account and hence this is like branch debtors method. Now if I go to see, you'll have opening, then on this, let's say your opening is 1974. During the year 13,200. Invoice price of the goods. There will be some loading divided by 120 into 20. I believe 2,200 will be the loading element. Achha, even on these stocks at invoice price of 1080, there would be loading. 1080 divided by 120 into 20. Maybe 180. Would be your opening stock reserve. Everything will come over here only. Then you will have what? Out of the goods received by it, the branch sent back goods invoiced 72,000. I think 72,000 are sent back. So 72 पे जो loading है, 72 divided by 120 into 20. I think 12 का loading will also be reversed if I am not wrong. The other transactions in the branch were as follows: cash sales. This is one. Other than that, credit sales. This will go into the debtors account. Cash discount, returns, bad debts, expense. Are you being given the closing debtors anywhere? Now how will we, just a second, you have trade debtors, invoice, cash sales, cash collected by branch from credit customers. So this is 2, perfect. So this will come 9,700, 2842, 12,542. Now you will use this data to find the closing debtors. Like your opening debtors were 384 during the year. You have done credit sales were 3140, collected 2842. Apart from that, there is a cash discount of 58, returns by customers 102, bad debts of 37, and that's about it. So this must be 384 plus 3140 minus 2842 minus 58 minus 102 minus 37. This is, I believe, 485. This must be your closing debtors. Now your closing furniture will be, let's say 500 into 16%. 80 का depreciation, 1 lakh, 100 into 16% divided by 4. I think 84 का depreciation आएगा, 600 minus 84 comes to I think 516. So over here if you go to see 516, 600, that is 500 opening plus 100 purchase during the year, and then depreciation at the rate of 16% on 500, and then 16% for 3 months on 100 rupees. Debtors I think are 485, we got that, perfect. Stock I think over here, do I have the stock given anywhere? No, so we can find that. So over here if you go to see memo stock account, opening, then goods sent 13200, then there are certain goods which are returned, 72, all of that, you will get 1470. This is a regular stock account. 1470 divided by 120 into 20, this will be 245 of stock loading. Other than that, there is 6 rupees of closing expenses outstanding. Now when we review all of this, so as you see, what we have done over here is a simplified presentation. 1974 in the opening, 13200 and 12. Other than that, there are certain payments because of furniture which is recorded, 180 for the stock reserve, 2200 loading, 72 goods returned, and then 12,542 remittance is coming to 11,700. If I review this, acha, what they've done is they've prepared the entire cash account and uske andar balancing figure nikal diya. So over here we took only these two, but then thode kharche bhi hai, branch expenses. You have been told at the end expenses paid by branch is 842, so I can remit only after paying those expenses. We missed that probably. And 10 is a closing balance to be kept, so 11,700 should be the balance over here. And considering that 11,700, there will be a balancing figure, and that balancing figure will be the net profit. So maybe the calculation of collection over here, there are some expenses which are paid by the branch and money that is also to be kept by the branch. So all said and done, that will be a total of 11,700 of expense. I missed out 842. Other than that, this is 9,700 plus 28. 42 minus 842, and you get exactly 11,700. Are we clear with this? Okay, so this takes care of question number 27 as well. Now before we proceed further, we will go to the other adjustments, which is fairly easy, I would say, of something called as an independent branch. Now as the name goes, what happens in case of an independent branch? So in case of an independent branch, the branch itself will keep detailed records. It will record, it will have its own trial balance. Head office will definitely keep records, but the branch will also keep records. So what is goods sent by head office to the branch will be goods received by the branch from the head office. In a similar way, you will have the entire branch balance separately and the head office balance separately. So over here, when you are looking at an independent branch, in this case, branch maintains its separate records, and hence the branch is in a position to prepare its own trial balance. This is for maybe slightly bigger branches where you will prepare your own, have your own records, own trial balance, balance sheet and profit and loss. Branch can determine its own profit by comparing the selling price that it charges to the customers with the price which it had purchased goods from the head office. So the branch will be able to find its own data. Head office can be treated like a manufacturer which sells goods to various wholesalers, and the branch is treated as one of them. Therefore, the stock received from the head office, goods lost or destroyed, will all be recorded in the books of the branch at the invoice price. Sales will be recorded at the price at which they have been sold to the final customers. Acha, when you look at independent branch, a lot of questions will involve reconciliations. All the transactions entered into by the branch should be recorded by the branch separately. The transactions entered into between the head office and the branch, So if it is only branch transaction, then branch will record. But if it is a transaction between the head office and the branch will record them through the head office account. So if the head office is sending goods to the branch is receiving the goods. So the entry is goods received from HO account debit to HO. So it is like head office is a creditor. When you are paying goods to the head office, the entry is okay, something account debit to bank. So head office is being paid off. Head office account debit to bank. If head office is paying your expenses, they are saying, okay, we are not paying anything, but our expenses are getting met. So expenses account debit to what? Head office, who is paying on your behalf. Something like that. And the head office will record them through the branch account. Ultimately, the balances in the head office account, in the books of branch, and the branch account in the books of head office will cancel, because for branch, if the branch says this is payable to the head office will say it is receivable from the branch. However, in certain cases, there might be a mismatch in these accounts, which can be due to goods in transit, cash in transit, expense, income not recorded, etc., which we will first need to pass entries in the respective books to reconcile. The next 2-3 questions that you do is more reconciling these items, and the difference, once they have been reconciled, can continue in order to finalize the overall accounts. Again, the theory over here might sound to be a little confusing, but first, step by step, we'll do a couple of questions where there are certain adjustments where you need reconciliation. Like when you look at question number 24 and 25, these are more like reconciliations where the head office sent good to the branch of 50,000. So head office must have passed the entry branch account debit, because like it's a debtor, I'm selling goods to the branch. So branch account debit to goods sent to branch 50,000. But by the way, branch received only 40,000 worth of goods. The remaining 10,000 are in transit. So the branch must have passed the entry goods received from the HO 40,000 to HO 40,000. Now, as a matter of fact, HO has already recorded for the remaining 10,000. Branch has not, and hence in the books of the head office, branch appears as a debtor for 50,000. In the books of the branch, the head office appears as the creditor at only 40,000, and hence in the books of the branch, where the 10,000 entry is yet to be passed, you will pass the entry goods in transit account debit 10,000 to head office 10,000. Thereby, the head office will become 50,000 at both places. The opposite will happen in case of cash in transit, where the branch has paid 50,000, but the head office has received only, let's say, 40,000, in which case 10,000 is in transit. So the branch must have passed the entry HO account debit to bank 50,000, but HO has passed the entry branch account debit, bank account debit to branch 40,000, and hence HO will pass cash in transit account debit to branch. So something like that. So we'll just review 24 and 25 first, and then we go to question 20. Goods worth 50,000 sent by the head office. Goods worth 50,000 are sent by the head office, but the branch has received till the closing goods worth only 40,000. Give the journal entry in the books of the head office and branch for goods in transit. For head office, you don't need to pass any entry for goods in transit. It is already passing branch account debit to goods sent to branch 50,000. But in the books of the branch, there would be goods in transit account debit to head office worth 10,000. This is your 24. Yes, it's a very basic question. I would say it's more like a small MCQ, or it will be a precursor to a bigger problem. Question 25. Alps, having a head office in Mumbai, has a branch in Nagpur. The branch in Nagpur is an independent branch maintaining separate books of accounts. Again, Alps, having a head office in Mumbai, has a branch in Nagpur. Okay. The branch in Nagpur is an independent branch maintaining separate set. On 31st March 11, it was found that goods dispatched by the head office were 2 lakhs were received by the branch only to the extent of 1,50,000, which means 50,000 are yet to be received. The balance goods are in transit. What is the accounting entry to be passed by the branch for goods in transit? Same entry, goods in transit account debit, this time 50 to the head office, 50,000. So when you review this, these are two fairly basic problems. So 10,000 and then 50,000. Now the question which considers most of these, now most of these questions are done over here. The other questions we'll do in some time. Go to question number, I think, 20. Pass the necessary journal entries in the books of an independent branch of Messrs. TPL Sons wherever required to rectify the adjustments on the following transactions. First, branch paid 5,000 as salary to a head office. अच्छा किधर मारने entries? In the books of the independent branch. Branch paid 5,000 as salary to a head office manager, but the amount has been debited by the branch to salaries, but this is paid to head office manager, and hence debiting to salaries is wrong, so you'll reverse the salaries and debit the head office. So this is head office account debit 5 to salaries 5. Remittance of 1,50,000 sent by branch has not been received by HO on date of reconciliation. So for this, the branch need not pass any entry. Entry, if any, will be done by the HO, but branch is not required to pass any entry because branch must have already recorded HO account debit to bank. HO has not received, so they will pass cash in transit account debit to branch, but branch need not pass anything, nothing. Branch assets, accounts retained at the head office, depreciation charge for the year of 15,000, not recorded by the branch. So assets are with the HO. So this is depreciation to the head office, I believe. HO2 salaries, no entry. Depreciation to HO. This is your expense. Assets are there in HO's books. If assets are created, assets are in HO, HO is created. Head office expense of 75,000 allocated to branch, but not yet recorded by the branch. So this is expenses of the branch to HO. This is 75,000. Expense account debit to HO 75,000. Head office collected 60,000 directly from a branch customer. So branch customer should be credited. Debtor is to be credited. Head office is to be debited. Intimation has not been given. So this is head office account debit because they have collected it to the debtors of the branch. Goods dispatched by head office amounting to 50,000. Not received by branch till date of reconciliation. Goods in transit to head office. ये हमारा favorite entry होगी. Branch incurred. Add expense of 10,000 on behalf of other branches, but not recorded in the books of the branch. So this is add on other branches. So HO account debit to bank. This is money that I want to recover. So this is HO to bank 10,000. Head office made a payment of 16,000 for purchase of goods by branch, but not recorded by branch. So branch के लिए purchase हुआ है to HO. So if I review this, this will be HO to bank and then purchases to HO. Are we clear with this? Yes. So this kind of takes care of question number 20. Okay. We will then go to, I think, question number 12. Go to question number 12 once. We'll review a few other questions. Let's go to question number 12, please. Okay, so let us review this. Ring Bell Limited, Delhi has a branch at Bombay where a separate set of book is being used. So this is an independent branch because there is a separate set of books. The following trial balance is expected on the river December 11. Great. So this is the trial balance, head office trial balance and the branch trial balance. The difference between the balances of the current account in the two set of books is due to follows. So if you look at the balances 129,010, 133,710. So these are different balances. Is as follows. First, due to cash remitted by the branch on the river December but received by the head office on 1st January. This is 3,000. So this is remitted by the branch, not yet received by the head office. So for the head office, they will pass the entry cash in transit account debit to branch current account. So over here in my cash balance, maybe I will add another 3,000 and in my branch I will subtract 3,000. Stock stolen in transit from HO and charged to branch by the head office. So head office has already recorded against the branch, but not credited to head office in the branch, as the branch manager declined to admit any liability. But if I have to reconcile in the books of the branch, I will say HO account will be credited. So this is loss by theft account debit to the HO account. So over here this is minus 1700, and maybe there is a loss. You'll have a separate adjustment for that. So this is 1700. So if I do 129,010 minus 1700, this is 127,310, and over here this is 133,710 minus 3000. 1,30,710. Just a second. So in the first case, cash remitted by the branch. Yeah, so ideally it is correct. Now give the branch current account in the head office books after incorporating the branch trial balance through a journal entry. So you will take over the branch's trial balance in the books of the HO. For that you will pass a journal entry, but before that I just want to reconcile these. Just a second. So if I look at cash and transit account debit to branch current account, this is in the books of the head office. Cash and transit account debit to branch current account. Okay, so I guess that is done. Acha, maybe what they've done is they've said that the branch manager has not accepted liability, so which means this is a loss which is borne by the HO. So even over here the entry will be in the books of the HO, that is loss that will be borne by the HO, and I had debited the branch, so I will have to credited the branch. Is it? Maybe. Okay, so if I go to see, this will be what? 133,710 minus 3000 minus 1700, 129,010. Okay, so this is 129,010. So now it is getting reconciled. Minus 1700, 129,010. Now you'll have to take over. So over here, how will you take over? Fixed asset has a debit balance. If you want to take over, you will have to credit it. So this is in the books of the HO. You will take all of these accounts. So over here, fixed assets, stock, debtors, cash. If I have to take over, my entry ideally will be fixed asset account debit, stock account debit, debtors account debit. So this is there. If I have to take this over, fixed asset debit, stock debit, debtors debit, cash debit. To what? Sir, I will credit the branch. I'm saying that by branch is going to give me all of this: 95, 54, 60, 19, 100, 6550. I think 171, 110. Further, I will also take over creditors. So this is branch account debit to the creditors. This is 10,400. Further, branch profit also belongs to me. So I'll take over the branch profits over here. If you go to this 10,400 and then branch current account debit to the combined profit and loss. So if I go to see credit, debit, 171, 110, credit, minus 10,400 debit, minus 31,700, and hence this is exactly 129,010. So over here what will happen is this 129,010 which is there on the debits will get negated when all of these assets and liabilities are taken over, like in amalgamation or consolidation. How do you take over assets and liabilities? In a similar way, you will take over these assets and liabilities, and thereby the branch account will be nil and all the assets and liabilities of the branch will be taken over. Now the question is asking you what? They are asking you to prepare to take over through a journal which you have done, and then give the branch current account in the head office books. In the branch current account there was a balance of 133. Then there were two adjusting entries. So this came to 129. Then you took over fixed assets, stock, debtors and cash. On the other hand, also the profit and creditors, and ultimately this account tallies. So this account gets knocked off and all the other assets and liabilities kind of get taken over. So this takes care of question number 12. Next you go to question number 11. Now Messrs. Ramchand of Hyderabad have a branch in Delhi. So Ramchand is the head office. Delhi mein branch. The Delhi branch deals not only in the goods from the head office but also auxiliary goods, and it deals in them. They, however, do not prepare any P&L but close all their accounts to the head office at the end of the year and open them afresh on the basis of advice from the head office. Okay, the fixed assets account are maintained at the head office. So the fixed assets are at the head office. Okay. The goods from the head office are invoiced at the selling price to give a profit of 20% on the sale price. Okay. The goods sent from the branch to the head office are at cost. Again, the goods from HO are invoiced at selling price to give 20% profit, and goods from the branch to HO are at cost. From the following, prepare a branch trading and profit and loss account and the branch assets account in the head office books. So I think this is all prepared in the head office books. The trial balance of the Delhi branch, this is entirely given to you. And you have branch balance on 1st January for furniture, debtors, cash, creditors, the closing stock at the branch. At the head office, invoice price is 3,000 and that of purchased goods is at 1,000. So goods that are purchased directly by the branch are at its cost, but this 3,000 is at invoice price. Depreciation is to be provided at 10% on branch assets. So what do I have to prepare? Well, I have to prepare the branch trading and profit and loss account and the branch assets account in the head office books. So when I prepare the branch trading and profit and loss account, what will I have? Well, we'll start with the opening stock. This is at invoice price, but I'll have to take it at cost. So 4,000 into 0.8. This is 3,200. And opening stock of other goods will be at 500 only. So if I go to see 3,200 and other goods will be at 500 only. Acha, next you will have goods from HO. This is 50,000, but this is at invoice price. And hence this will be at 50,000 again into 0.8, maybe 40,000. Perfect. Goods sent to branch. This is for the branch. Then you'll have salaries, rent, office expenditure. This will be taken as it is. These are expenses. I think these will go in the P&L account. 1, 2 and 3. This will go in the P&L account. Next you will have, well, these are balance sheet items. Cash on hand, cash at bank, sundry debtors, these are all balance sheet items. Sales of 1 lakh. I think gross profit over here is, can be calculated. Goods to HO. So this is goods probably returned to HO, and over here this is at the same price. These are at cost only. So this will be 3,000. Sundry creditors will be in the balance sheet. So over here this is sales 1 lakh. Goods sent back. So this is 3,000. And then there will be closing stock. As you see below, closing stock was 3,000 into 0.8. This will come to 2,400. And then goods directly purchases 1,000. So your GP will be 42,700. And that's about it. If you review, then other than this, there would be a depreciation. Furniture is 5,000. And is there a depreciation rate given? Yes, 10%. So this is, I believe, 500. And then 30,200 will be the balance in the profit and loss account. Apart from that, if I look at the branch assets, which are kept in the HO, everything else is in the branch books only. So branch, you have to prepare. See what is asked. You have to prepare branch trading and P&L account and branch assets in the books of HO. So you are doing everything from HO's perspective. So from HO's perspective, you have recorded everything at the cost for the HO, found the profit, and branch assets. Remember, other assets of the branch like cash, bank are kept in the branch only. It is furniture which is recorded in the HO's books, and hence furniture 5,500 ka depreciation, and hence 4,500. Okay, question 13 maybe we'll do in the next session. That will be our last session where we will discuss the remaining questions. We'll try to review question number 14 as well as 15. So let us review. Question number 14, please. Now, Affix of Calcutta has a branch at Delhi to which goods are supplied from Calcutta, but the cost thereof has not been recorded in the head office books. On 31st March 11, the branch balance sheet was as follows. So you've been given the branch balance sheet. Creditors, अच्छा branch के अंदर head office books are appearing. Then there is debtors, cash at bank, and building extension was closed by transfer to HO. So building would appear in HO's books during the 6 months. So now this is 6 months from 31st March 11 to 30th September 11. The following transactions took place at Delhi. So these are transactions which took place at Delhi. So this is in the branch. All of these transactions are there. Set out the head office account in Delhi books. Head office account has an opening balance. An opening, I think, liability, that is credit balance of 168. Then you have to figure out as an independent branch what all, like you passed entries earlier, journal entries. Now you have to prepare a ledger where you take all the entries, and the branch balance sheet as on 30th September also give journal entries in the Delhi books. So when I prepare the branch account, the opening balance will be 1,68,000. Now why will this balance change? It will change because of sales, which is attributable to the HO, purchases, wages. Now salaries is inclusive of advance of 2,000. So this is not an expense per se. General expenses, fire insurance, there is some remittance to the HO of 38,400. Manager's salary, collection from debtors, discount allowed, discount earned, cash paid to creditors. I think debtors and creditors are kept in the branch account only. Building account, further payment. Building is recorded in HO's books. Cash in hand, cash at bank. Okay, set out the head office account. So if I look at the head office account, I will start with a credit balance of 168. Now, branch is incurring or earning income. This income will go to the head office. So if I look at the income, I believe I've received 2,40,000 of income. Further, I believe I've also received some discount earned, 1,200. So both of these, if we go to see question number 14, you will have 168 credit and 2,40,000, which is on sales, and 1,200. So 2,40,000 and 1,200, 241, 200. We are saying that this is more that is due to the HO. Whatever I earn, I'm branch of the HO. Whatever I earn, I have to give to the HO, and hence 241, 200 over here. Apart from that, whatever is a building के लिए जो भी खर्चा गया है 4,000 will also be going in the HO because this is paid by the HO. Paid for the building which is recorded in HO's books. Now all other expenses, if you go to see 1, 2, 3, even 4, 5, I think all of these expenses, salaries inclusive of advance. So this is 4,400 of expense during the period. 2,000 is advance salary, will appear in the balance sheet. Insurance paid for 1 year. So maybe 6 months ke liye this will be 1,600. So if I take all of these total that I've highlighted in blue, okay, 48 plus 20 plus 4,400 plus 1,600 plus 1,600 plus 4,800 plus 8,000. I think 88,400. This is sundry expenses, all the expenses included. And other than that, between the HO and the branch, there is some cash remittance to the HO. This will reduce the HO balance, and hence the remaining 2,78,400 will be the HO balance. Now, if I prepare the balance sheet, I'll have to find all the assets and liabilities. Over here, you'll have cash, you'll have bank. For creditors, you can prepare a small account starting with these were 40,000, and you will have to come down and find the closing balance of the creditor. Similarly for debtors. So over here, for creditors, you will prepare, let us say, an account 40 Then purchases of 48, discount and payment. So 2600 debtors. Opening was 2 lakhs, 2 lakh 40 of sales, receipts of 1 lakh 60, discount and hence 272. Cash bank after all said and done. Ultimately, you have cash and bank together at 29,600. You will put all of this in your balance sheet. Will furniture appear in my balance sheet? Building appear in my balance sheet? No, this will appear in HO's balance sheet. So you'll have cash at bank, cash in hand, prepaid insurance, advance salary, that is there. And other than that, you'll have creditors, and unlike share capital, partners capital, you'll have the HO account. So this is one slightly different type of a question where you are asked to prepare the HO's account. So you take all the incomes that are coming to the branch will ultimately go to the HO. All expenses are ultimately HO's expenses, and that ways you find the HO's balance. Any other assets and liabilities you put over here. Usually you have trading and profit and loss questions. Here you have the balance sheet question. Next you look at question number 15, and I think we will stop for today's session and for on that, and then the other whatever are remaining questions including foreign branch. So the next session we'll also discuss foreign branch. It is best if you have also done AS11 so that you can get the conversion principles properly, and we'll end the branch discussion in the next session. So let us review 15. The following trial balance is there on 31st December 11 have been extracted from the books of major and its branch at a stage where the only adjustments required to be made prior to the preparation of balance sheet as a whole. So this is your final position. Few other adjustments which are given below are required to be made. You are required to record the following in the appropriate ledger in both sets of books. Goods transferred from head office to the branch are invoiced at cost plus 10%, and both revenue accounts have been prepared on the basis of prices charged. So this is general information. Invoice prices cost plus 10%. Relating to the head office, goods sent by branch on 31st. Relating to head office, goods sent by branch on 1st January 11 includes goods received from head office at invoice price of 4565. Maybe 1st January 11 will be starting. So on 4565, maybe there will be a stock reserve. 4565 divided by, I believe, 110 into 10, maybe 415. Goods invoiced by head office to branch of 3641 were in transit on 31st December 11, and also a remittance of 3500 from the branch. So for this you will have to pass adjusting entries where required. Goods invoiced by head office to branch of 3641. This will be appearing in goods in transit. Goods in transit account debit to, for example, branch, to HO. So in the branch books, there will be goods in transit account debit to the HO, and also a remittance of 3500 from the branch, in which case over here in the current assets, this will be cash in transit account debit to the branch 3500 at 31st December 11. The following transactions were reflected in the head office books but unrecorded in the branch books. The purchase of lorry of 2500 which reached the branch on December 25th. So this is branch assets. So this is branch के books में you will have lorry account debit to HO and a sum received on 30th December from one of branch debtors. So this is debtors will go down to debtors, and this will be debited in the HO by 750. So these are the adjustments if you go to see in the books of the HO. So let us focus on the books of the HO only. First, in the books of the HO, you will have the branch account 31,536. Okay, over here you will record, I think, a cash in transit of 3,500. This is 3,500 and that is about it. So this is 28,036. In my current assets also, that same cash in transit will be recorded. So this is 125 039. Now your opening balance on 1st January 11, I think there's a printing mistake here. There's an opening balance on 1st January 11 given, which means this must be 1st January 12. Relating to head office, goods sent by branch, goods invoice. Acha, sorry, were in transit on 31st December 11. So this is closing. Okay, 3641. And what else was there? 4565. This is 1st January 12. 4565. 8206 into 10 upon 110. I believe 746. So our closing stock reserve should be 746. During the year, 53 of additional stock reserve to be created. Now if I go to see, in this case, there's a revenue account or profit account of 43210. 43210 में से ये 53. Further, stock reserve adjustment will be subtracted and hence you'll be left with 43157. Acha, when you look at the branch books, again you'll have the HO account. We'll start with the HO account at 10,250. Now in this 10,250, where is this? No, sorry. Not revenue account, 22. 645. You'll record goods in transit. 3641. Lorry 2,500 and 750 of payment. All said and done. 28,036. These are ledgers of journals that you prepared in question 20. So this is a ledger effect. Now this will impact every other item, like you have fixed assets will increase by 2,500. Current assets will first increase by 3641 for goods in transit and reduce by 750 because money was collected from the debtors. And that's about it. You will get 26,0606. If you give effect to all of these items, like we just discussed, your accounts will be ultimately ready for the purpose of finalization. I guess that should be it. 16, 17, 18 over here are foreign branches. A couple of other questions which are also remaining, and we'll try to complete that in the next session. So that should be it for today. I'll see you in the next session. Bye-bye. Take care. Hello everyone, and welcome to this last session for discussing your branch accounting. So in today's session, we'll discuss the remaining few questions for independent branches, and then we also move on into the last part, which is foreign branches, for which you need some understanding of AS11 foreign exchange, though we will be discussing the same as well. So over here, we'll go to question number 28. There's another question 22, which is exactly the same, not even similar, it is exactly the same. So 28 once done, your question 22 will also get covered. So let us review question number 28 on 266. On 31st March 12, Kanpur branch submits the following trial balance to its head office at Lucknow. So this is a trial balance of the Kanpur branch. It has its own trial balance to the head office. So you'll have furniture, depreciation on furniture. So maybe this is an expense. Then your salaries, rent, advertising, all of these are expense. Sundry office expenses, and then you have stock on first table. This is your opening stock. Goods received from the head office. So as a branch, I'll record the goods which are received. So if there are certain goods which are sent but not yet received, that will still be in transit. Debtors, cash at bank, carriage inwards. Credit balances has outstanding expenses. Goods returned to the head office. Sales and head office account. So there is a separate head office account in the books of the branch. Additional information. The stock on 31st March 12 was valued at 62 lakhs. This was your closing stock. It is given in the adjustments. On 29th March 2012, head office dispatched goods costing 10 lakhs to its branch. The branch did not receive these goods before 1st April. Hence, the figure of goods received from the head office does not include these goods because they have not yet been received. However, there will be an adjusting entry for this, which will be goods in transit account debit, I think 10 lakhs, to the head office, I think 10 lakhs. Also, head office has charged the branch 1 lakh for centralized services, which the branch has not passed any entry. So what is another entry would be centralized expenses account debit 1 to the head office. Let us say 1. So when I look at the head office account, now your head office account will be 80 plus 10 plus 1. So maybe your head office will appear at 91. Apart from that, there will be some goods in transit which will separately appear. So there will be some goods in transit which will appear at 10. You will add it separately along with stock, and there will be some centralized expenses which will also appear, centralized expenses which will also appear, for example, at 1 rupee. This is your expense. Now what is required? You are required to pass the journal entries in the books of the branch to make the necessary adjustments. So these are the two journal entries for goods in transit as well as for centralized expenses. Second, prepare the final accounts of the branch including the balance sheet. So this is for the branch final accounts. You have the entire trial balance. After the adjustments, you will prepare this and then pass the journal entries in the books of the head office to incorporate the whole of the branch trial balance. So you will take over. So all the assets, liabilities of the branch will be taken over. All the expense incomes of the branch will be taken over, and ultimately the profit of the branch will also be taken over. So when we are looking at this, first we will look at the journal entries. If I go to see, these are the two entries: goods in transit account debit to head office, centralized expenses account debit to the head office. So this takes care of the first part. Second, you are required to prepare final accounts which will include the balance sheet as well as the trading and the profit and loss account. So when I do that, furniture and equipment will appear in the balance sheet, depreciation will go to the branch profit and loss, salaries in the profit and loss, rent in the profit and loss. We are assuming that the furniture will be after depreciation, so you must have passed into depreciation account debit to furniture, but depreciation is not yet been closed. It's a nominal account. Profit and loss, telephone, profit and loss, office expenses, profit and loss. Apart from that, you will also have centralized expenses which will appear in the profit and loss. Then you will have some stock. This is opening. This will go in the trading account. Goods received from the head office. Okay, this will also go in the trading account. Debtors will appear in the balance sheet. Cash, balance sheet. Carriage, I think this will be in the trading account if I'm not wrong. Carriage inwards will be in the trading account. Goods in transit will appear in the balance sheet. Goods in transit, I think, because it is in adjustment, there would be some effect in the closing stock as well as there would be one effect in the trading account on the credit side. Outstanding expenses, again this will appear in the balance sheet. Goods returned to the head office, this will appear in the trading account. Sales, trading account, and then the head office account. This will be like your capital. Branch gets money from the head office only. So when I look at this, all your expenses put together over here, this will be what? 2 and 5, 27, 37 and 6 and 3 and 1. I think 48 rupees including centralized expenses. There will be P&L related expenses of 48. Achha, apart from that, if I go to see, so if I go to see over here, all of these together, you can just verify, ideally should be around 48, 25, 27, 37, 37 and 10 and 11, 48, that is right. Apart from that, we said that you will have the opening stock which is 60, which is given to us. What is the opening stock? I think this is 60. Closing stock is 62. Over and above that, there are some goods in transit of 10 as well. But remember, you can include something in goods in transit if you have included it in the so-called purchases. Your purchases only include goods received. This is 288. On this, another 10. Yes, this is in transit, so this will appear along with the closing stock. But then 288 plus 10 will come over here. Achha, however, there are certain goods which are returned as well, and hence minus 5, and hence 293 will be there, which is your, let's say, the so-called purchases from the head office. Next, you will have sales, closing stock 62, goods in transit 10, and then 72, and this will give you carriage inwards also over here. This will give you a net gross profit of 72. From that gross profit of 72 over here, all of these items will be deducted. 72 minus 48 will come to 24. So this is your profit and loss. When you go to your balance sheet, in your balance sheet 24 of profit will be added to the branch, to the head office account. Head office opening is around 91. Adjusted balance, I believe, is around 91. Just a second. Yes. So this is 91 to this 24 will be added, and hence this is 115. Other than that, you have to just add everything as it is. Furniture at 18, debtors at 20, cash at 8. Separately, along with 62 of stock, there will be a goods in transit of 10, and hence this is 72. And then there will be some outstanding expenses worth 3 rupees. and your balance sheet would tally at 118. Now you have to take over everything of the branch into the head office. So all your assets will be taken over. Furniture account debit. So in the books of the head office के books में ideally branch will be like a debtor. Like if in head office books, if in branch books, head office is like a creditor or a capital provider. In the books of the head office will say the branch has to give me stuff. So the branch gives you 18 plus 20 plus 8 plus 72. So over here 118. So this will be branch. Once it gives you, branch will be credited. Furniture debit, cash, stock, goods in transit, 118. Perfect. Okay, so this is taken. Next you'll have, I think, 3 rupees of outstanding expenses. 115 to intercompany, it will get eliminated. So this will be branch account debit to outstanding expenses. So this is branch account debit to outstanding expenses. Then you go to the profit and loss account. So you have taken up the balance sheet, but now the profit and loss account, you'll have to take over the incomes. So on the credit of the trading, I think there is 360 plus 72, 432. So let's say you will take over sales as well as your closing stock. And over here, 60 plus 293 plus 7, I think 360. So you'll have branch account debit to opening stock, to goods sent to branch, to carriage inwards. So this is at 360. If you go to see all your expenses, branch trading account to branch, all your expenses will be taken over. Next, your incomes. So over here, we'll say these are expenses of the branch which is taken over by the head office. Then the incomes of the branch will be taken over by the head office. So this will be branch account debit to all the incomes around 432, and then 48 worth of expenses. If you take over all of this, now institute has taken over, so we have taken this. But if you take the net profit, that is 24, all said and done. If I just have to prepare the final profits, 24 of the branch profit. So if I go to see in the branch trading account, 360 debit, 432 credit, 48 debit. So this will be around 24 rupees. 432 of incomes minus 360 minus 48. And hence, this is 24 worth of income which will be taken over. So this will be taken into the general profit and loss, branch trading and profit and loss account debit to the combined profit and loss account. This is 24. You will take this over, and I guess that should be it. With this, your question number 28 gets done, where you are taking over the assets as well. Now if you look at question number 22, this is exactly the same, not even similar, same as question number 28. And hence if you do 28, you don't need to do 22 again. If you see the same thing, everything remaining the same, you are required to pass journal entries in the books of branch, prepare final accounts. In question 28, over and above this, you also have to take over. So the entry is also to be passed. So you do 28, then you don't need to do question number 22. Okay. Next, you will go to question number 13, and this is the last question before you do foreign branches. Sorry. So this is question number 13. We'll review question number 13, and then we'll go to foreign branches. So let us review this. It's a slightly longer question. So question number 13. Now KB manufactures a range of goods which it sells to wholesale customers only from its head office. So from the head office, you are selling goods to the wholesale customers. In addition, the head office transfers goods to a newly opened branch at a factory cost plus 15%, and the branch will then sell these goods to the general public only on cash basis. Okay. The selling price to wholesale customers is designed to give the factory a profit amounting to 30% of the sales value. So whatever you sell from the head office directly to wholesale customers, there will be a 30% profit on the sales value. The selling price to the general public is designed to give a gross margin, that is selling price minus cost from the of goods to the HO of 30% of the sales value. Okay, the selling price to the general public is designed to give a gross margin, that is selling price less cost of goods from the HO of 30% on the sales value. Okay, now KP operates from rented premise and leases all the other types of fixed assets. The rent and the hire charges for these are included in the overhead cost shown in the trial balance. So all of that cost is there in the overhead cost of the trial balance. From the information given below, you are required to prepare for the year ended 31st December 11 in a columnar form of profit and loss, first for the HO, then for the branch, and then even for the entire business. So usually you only had HO or you had only had branch. Now you have HO, branch, and the combined business as well. And the balance sheet as on 31st December 11 for the entire business. Even here you can show this columnar and then do it for the entire business. So you have the HO, you have the branch, all the data given to you, raw materials purchase. But finally we usually take raw materials consumed, direct wages, factory overheads, stock of raw materials. So over here this is 1800. So for consumed you'll have 1800 plus 35,000 and then is finished goods. This will be shown as opening stock in your trading account. Debtors, cash, administrative salaries, salesman salaries, other admin and selling overheads. Now there is some inter-unit accounts. This is between the HO and the branch. Capital of 50,000. This is the head office capital, outside capital, sundry creditors. Provision for unrealized profit in stock. This is like a stock reserve of 1200. Okay, we'll have to see how to take the adjustment for this. Sales, then goods sent to branch, goods received from HO. Goods sent to branch is 46,000, goods received is 44,500, and hence there is a 1500 hidden adjustment for goods in transit, I believe. On 20th December, the branch remitted 1500 to the HO, and this has not yet been recorded in HO books. So it must be there in branch books, not yet recorded in HO books, so you'll have to make an adjustment. Also on the same day, the HO dispatched goods to the branch at 1500, and these two have not yet been entered into the branch's books. This you could have detected, 46 and 44,500. The company's policy is to adjust the items in transit in the books of the recipient. So over here in the HO's books, you will pass the entry cash in transit account debit to branch of 1500. So there will be cash के साथ एक cash in transit of around 1500 debit, and then branch will be credited. So in the HO's books, is there a separate branch account? It should be ideally. Inter-unit accounts 5,000 minus 1500, and then in the branch books, goods in transit account debit to HO. So goods in transit plus 1500 and to HO, which is worth 1500 to HO. So this is credit increasing by 1500, and hence this will come down to 3500 net debit. This will come to net 3500 net credit, and hence these inter accounts will ideally knock off, cancel. The stock of the raw material held at DHO on 31st December was valued at 2300. So this will help you first find the raw materials consumed. At the same time, this will be shown as the closing raw material stock. 1800 plus 35,000 minus 2300 comes to, I think, 34,500. So this is raw materials consumed, which will be at 34,500. You are advised that there are no stock losses at the HO or the branch. It is KP's practice to value finished goods at HO at factory cost. There were no opening or closing stock, work in progress. So that is fine. Even if this was not given, these are implied assumptions. And branch employees are entitled to a bonus of 156 under a bilateral agreement. Now this is not recorded, so it will have to be recorded. So this will be bonus expense account debit to bonus payable. So it will be a separate entry in branch, bonus account debit to, let us say, bonus payable at 156. Now once you do that, this is like your normal final account, just to be prepared in a columnar form. So when you do this, let us say, if I were to, how do I see this? I think question number, let me just do this in a slightly more expanded 2-page form. So this is question number 13. For KB, you have the trading and profit and loss account, and then on the next page, you have the balance sheet. Again, both of these are given in the columnar form. Like when you look at the opening stock, this will be opening stock of finished goods. So when I take the opening stock of finished goods over here, question number 13, the opening stock of finished goods is 13,000, this is 9,200. As you see, 13,000, 9,200, and hence the total is 22,200. Next, you will have purchases. So over here, if we go to see, there is raw materials consumed. So the entire 34,500 will come over here. Raw materials consumed. Can you see over here below? You can see 34,500. Okay. Next, you will have certain direct expenses like direct wages, factory overheads. All of this will come directly. Direct wages 1,08,500. Factory overheads maybe 39,000. Now this is all for HO. For branch, the goods received from HO, including the goods in transit, that is 46,000, will be like the purchases for the branch. So over here, you will have in the branch account goods from the head office. Can you see 46,000 over here? Perfect. Now beyond this, you will recognize sales. On the credit side, if I were to recognize sales, this is 2 lakh and 65,200. Perfect. But I don't have the closing stock. Well, I have for raw materials, but that is already taken. I don't have the closing stock of finished goods. However, there is a way in which I can find the gross profit. If I can somehow find the gross profit, well, the balancing figure can be possibly the closing stock. So over here, I will book the sales. As you can see, 2 lakhs 65,200. Now, head office directly sells. Head office directly sells to wholesalers. So 2 lakhs is the sales to wholesalers. 2 lakhs into 30%. This will be probably 2 lakhs into 30%, 60,000. But other than that, the head office has also sent goods to the branch on which it has made a profit. If I go to see, you are transferring at cost plus 50%, 15%, which means over here, we can say that if 46,000 is the amount transferred, now this is transferred at the transfer price. So if your cost is 100, 15 is the profit, then this 46,000 is equivalent to 115. So if 46,000 is 115, then 15 is how much? I believe 6,000. So when I look at the calculation of profit over here, just a second, I will say for the head office, wholesale 2 lakh rupees sales into 30%. This will come to 60,000 plus goods sent to branch. Total 46,000 are sent, but this is at 115. 15 is a profit and hence 6,000. So 66,000 is a gross profit. Now for the branch, the total sales are 65,200. Now these are sold to ensure that the total profit is around 30%. So as you can see over here, they have told that the selling price to the general public is designed to give a gross margin of 30% of the sales value. So for the branch as well, you will take 65,200 into 30%, which comes to 19,560. Now once I have these two numbers, which were the important adjustments here, I can find the closing stock. So as you can see over here, again if I open a 2-page view, this will be for example, you will take sales, goods sent to buy goods in transit. There are certain goods in transit, and other than that, there will be some closing stock. But how will I find the closing stock? Well, I'll have to have 66,000. This, what I've written in green, is the most important thing over here. So over here, you'll have to find a gross profit on your own, and based on that, you will get the closing stock. Now, head office closing stock is at cost only, but the branch closing stock will have some profit margin because this is at 115. This may be goods in transit as well as the stock in hand. So 8060 plus 1500, that is 9560, divided by 115 into 15. I believe this is around 1247. So ideally my stock reserve should be 1247. But do I already have some stock reserve in my balance sheet? Well, yes. If I go to see in my balance sheet, the stock reserve is appearing at 1200. So I'll have to add another 47. Another 47 on my stock reserve. This is in the HO's books. So that the stock reserve in the current year, additional stock reserve of 47 and this is a working 1500 and 8060 into 15 by 115 less 1200 already there, and hence 47. This is P&L account debit of the HO to the stock reserve of 47. Now other than that, all of these other expenses, you have these other expenses as it is in both the books. You will record all the expenses that I'm putting in pink over here. All of these other expenses will get recorded. Apart from that, there will be a stock reserve which will also get recorded. So over here, if you go to see, there will be admin no adjustment, salesman no adjustment, again selling overhead no adjustment. There will be a bonus adjustment as well, and that's about it. And there will be a stock reserve. So this will help you in finding the final profits. So these will give you the final profits. Okay, now what else is asked? Sir, we are also asked to prepare the balance sheet. So over here, when you're preparing the balance sheet, we will do this balance sheet working also in a columnar way. So over here in the head office, there will be a capital of 50,000. In the head office books, there will be a capital of 50,000. Other than that, there's a creditors of, maybe I'll use some other color highlighter for this. So maybe if I go to see over here, let us say 50,000 and 13,000. Other than that, you will have 37, 22, and in stock, you'll have the closing raw material stock as well as the closing finished goods stock. So your closing raw material stock was 2,300, and then the finished goods stock, I think you calculated it in the trading account of 15,000. So if I go to see over here in the balance sheet, I'll have my regular, in my head office, I'll have my regular raw material stock, 15,000 finished goods stock, and then this is 1,700. Stock reserve will be subtracted ideally from the stock which is there in the branch when I do the combined working. So this is 17,300, debtors, cash, there's also some cash in transit to be shown. In the HO books, 50,000 is the capital, to which 17,053 of HO profit as well as 6,904. Like in the last question 28, we took over ultimately the profit of the branch which is also belonging to the HO, and hence 6,904 you will add Sunday creditors and then stock reserve of 1,247. In the branch books, everything will be taken as it is. There's a 1,500 and 8,060 stock. There would be possibly, so goods in transit is taken. There would be some cash, bonus payable, and other than that, head office is like your capital. Here, branch 10,404. Now, how is 10,404 coming? Ideally, तो हमने calculate किया है 3,000 if I'm not wrong. So ideally, your HO account and branch account is showing 3,500. However, can I say branch earned a profit of 6,904? That profit belongs to the HO, and hence the branch will say plus 6,904 of profit, and hence 3,500 plus 6,904 comes to around 10,404. HO will say that branch owes me 6,904. It is using my resources, and in this is the same thing. Can I say 10,404? This is how that is coming. Like we have prepared an account for branch in HO's books. There was 5,000 in HO's books, but there is some cash in transit of 1,500, so net 3,500, and then net profit. Like in my earlier problem question 28, I took over the combined net profit. I might have passed 2-3 separate entities, but ultimately the net profit was taken over. So that is 6,904 taken over. So 10,404. In branches books, HO account, I had to pay 2,000, another 1,500 for the goods in transit, and then another 6,904 of the profit that I earned is attributable to the HO. And hence this is 10,404. So this will take care, and when I prepare my combined balance sheet, what all adjustments will happen? In my combined balance sheet, I will not really show my stock reserve. In fact, as a liability, I will reduce it from my stock. So as you can see over here, when I take my combined stock from this, I will reduce my stock reserve, and in my combined balance sheet, the branch and the HO 10,404 will get knocked off. Other than that, everything else is a direct addition. So we'll try to, just a second, showcase that. So when I look at the balance sheet here, 73,000 still appears, 13,000 appears. This 1247 will be reduced from the stock. 156 still appears. 10,404 knocked off against 10,404 of asset. Stock of 2,300 still there, 1,500 still there, 23,000 still there, minus 1247, and then everything else is also a direct line by line addition. So this is, I would say, a problem which you would definitely want to practice, because it gives you an overall understanding of the HO trial balance and HO profit and loss and balance sheet, branch profit and loss and balance sheet, and also the combined profit and loss and balance sheet, and hence it is definitely an important question. Now other than that, there are around 4 or 5 problems remaining. 16, 17, 18, and then 29 and 30. All of these are foreign branch problems. Now for doing foreign branch, you need to refer AS11. If you have not done that, this may be a little difficult. If you have done that, we can continue over here. So what if your branch is located outside India? In which case, branch will prepare its financials, trial balance. Let's say it's an independent branch. It will prepare its financials, trial balance, everything in dollars. Now you need to convert that into your own currency, in rupees. So what are the rates you should select? Or it can also be the other way around. You are an Indian branch of a US company. You have prepared your trial balance in rupees, but the branch needs to give data to its head office. Head office needs it in dollars, and hence you'll have to convert it. Now AS11 gives you these translation principles, but before giving those principles, it requires you to segregate the branch into one of the two categories. It's either a integral branch, which is a dependent branch, whereby the integral branch is dependent on the head office. It is unable to finance its own operations, and hence this is a dependent branch. It is an extension of the head office only. And second type of branch is a largely independent branch. Like when you look at a company like Jaguar and Land Rover and then Tata Motors. Now JLR is largely independent. It is able to finance its own operations and everything else. And hence JLR is largely an independent operation. So over here, if it's an independent operation, it is called as a non-integral branch. Now the translation principles for both of them were different. Like if it's an integral branch, it is treated as an extension of the entity. Whereas a non-integral branch would be treated as a completely different entity, and as a result the translation principles were slightly different. So before we proceed, let us review this once. Over here, in case a branch is located in a different country as compared to the head office, then the trial balance will be in another currency, and hence in order to integrate it with the head office, the trial balance will need to be converted into head office currency, and such a translation can be done as per AS11. Now when you look at foreign branch, it can be integral, it can be non-integral. Integral would be an extension of the head office. Non-integral would be largely independent of the head office operations. Integral is dependent, non-integral is able to finance its own operations. Now translation principles over here are: incomes and expenses are usually converted either at the average rate or the rate on the date when transaction takes place. This is for both integral as well as non-integral. Usually this will be the average rate. Average rate is, if it is given, you will take that only, and if it is not given, you will take opening plus closing divided by 2. Assets and liabilities, if there are monetary items. Monetary items are those items which can be converted into a determinable or fixed amount of money. These are monetary items. They will be converted at the closing rate for both integral and non-integral. But if it is non-monetary items are not convertible into a fixed or determinable monetary value, like a fixed asset or an intangible or an inventory. They will usually be converted at the historic rate for a integral branch, whereas for non-integral, they will also be converted at the closing rate. So if nothing is given in the exam, it is for a branch. Institute has solved almost every question using integral branch only, and hence these non-monetary items will usually go at the historic rate. Now what can happen is the trial balance was tallying in dollars for a foreign branch, but if you convert this into rupees, taking something at the historic rate, something at the closing rate, something at the average rate, do you think it is going to tally? No. So the difference in the trial balance is due to different exchange rates applied, and as a result that will be taken as a foreign exchange gain or a foreign exchange loss, as the case may be. This will go to the P&L in case of an integral operation. However, if it is non-integral, it is largely independent, and hence it is not going to remit the money back to India, in which case you keep it into a separate reserve called as foreign currency translation reserve. So over here, forex gain or loss, which is usually the balancing figure, will be taken in the profit and loss. For an integral branch, will be taken into FCTR, foreign currency translation reserve, for a non-integral branch. Now there may be certain special cases, like fixed assets usually will be taken at the historic rate. Then what will be the depreciation? Well, the depreciation will always be at the rate on which the fixed assets were recorded. So if fixed assets were at the historic rate, depreciation will also be recorded based on the historic rate. Similarly, in a non-integral branch, the fixed assets were at the closing rate, in which case depreciation will also be converted at the closing rate. So special items like depreciation over here will be the rate at which PP is recorded. In case of an integral operation at the historic rate, so depreciation also at the historic rate. In case of a non-integral, at the closing rate. Next, you look at inventory. Now, this is important. The last two are relatively important. Inventory ideally should be recorded at the rate on the date when the inventory was purchased. However, if you don't have that, if you just have the opening stock and you have the closing stock, then you convert the opening stock at the opening rate, closing stock at the closing rate. So, if the transaction rates are not available, opening stock will be at the opening rate, closing stock will be at the closing rate. And then there are inter-company accounts, like in branch books, there will be head office account. In head office books, there will be branch account. In case you have to prepare, you have to ensure that these accounts cancel, and hence you will take the rate as the actual amount. So if in head office the branch is appearing at 10,222, in the branch account head office is appearing in dollars, you will convert it in such a way that it comes to 10,222, so that it cancels. This is the same for goods sent to branch and goods received from head office. Same for everything, so that these inter accounts cancel. So the intergroup items like a head office or a branch or goods sent to branch will be recorded as per the actual rates or the amounts appearing in the head office books, so that they internally cancel. Now, based on that, there are 5 questions. We'll quickly review them and then get done with this chapter. So let us go to question number 17, please. So you'll have question number 17 where there's a trial balance that you'll need to convert. So over here, then 16 and 18, I believe, we'll have the trading and P&L account to be prepared and the balance sheet. S&M, Bombay has a branch in Sydney. Great. The Sydney branch is an integral clearly given to you for an operation of S&M, and at the end of 31st March 12, the following ledger balances have been extracted from the books of the Bombay office and the Sydney office. Bombay office is in rupees, Sydney office is in Australian dollars, and you have been given this entire statement. Next, the following information is available. Stock as on 31st March 12 in Bombay is 1,50,000, in Sydney is 3,125. On 31st March 12, you are required to convert the Sydney branch trial balance into rupees using the following rates of exchange. You have the opening rate at 20, closing rate at 24, average rate is given to you as 22. Now this could have been 20 plus 24 divided by 2 or some other number as well, and the rate for fixed assets is at 18. So over here, if I want to convert the Australian branch into rupees, plant and machinery at cost will be converted at what rate? I think this is going to be at 18. Depreciation will be recorded at the same rate at which plant and machinery was recorded, that is 18. Stock on 1st April will be the opening stock. I think debit, credit. Oh, this is debtors, creditors. Sorry. Debtors and creditors will be at the closing rate. Both of these will be converted at 24 and 24. Stock, opening stock will be converted at the opening rate, that is 20. Then you have cash and bank balance, again closing rate 24. Purchases, sales, these are incomes and expenses, will be at the average rate of 22. Goods sent to branch, over here, this will be based on actuals. So this 5 will become this 100, so that they internally cancel. MD salary, wages and salaries, average rate 22. Rent average 22, office average 22. Then you have commission receipts average 22. Branch or head office current account, this is 120, this is 7, this will be actual. That is, you will convert it and show it at 120, and that's about it. So if you review this, I believe if you go to question number 17 to start with, just a second, yes. So you will see plant and machinery at 18. Depreciation on that also at 18, debtors at closing, creditors also at closing, stock at 20, cash and bank at 24, purchases at 22, goods sent to branch at actual, this will be at 100. You will not really look at the rates, you will take it on an actual basis. wages and salaries, rent, office, commission, everything at 22, and head office will be at actual, that is actual 120. Now with that, your Sydney branch trial balance, which was tallying in Australian dollars, if you convert this into rupees, this will not tally, and 216 will be the difference, which will be forex loss because it is appearing on the debit side, and hence because it is an integral branch, will be taken to the profit and loss account. Are we clear with this? Yes? Okay. So we'll go to question number 16. Now most of these questions are on similar lines. There may be one or two adjustment here or there which is different. Let us quickly review this. Question 16. On 31st December 12, the following balances appeared in the books of Chennai branch of an English firm having the head office in New York. Which means if it is a Chennai branch, it will prepare accounts in rupees. But sorry, you'll have to convert this back into dollars. So over here, we'll have this entire thing. I think this is in rupees. Okay. And if the rates are given in rupees per dollar terms, you'll have to divide this. So if there's 10,000 rupees divided by rupees 50 per dollar, that will give you the answer in dollars. Stock on 31st December 12 was 637,500. This is your closing stock. The branch account in New York's books showed a debit balance of $13,400. So this is given to you on 31st December 12, and furniture appeared in the head office books at 1750. Maybe they have given you these two amounts, and hence you might have to take that. The rate of exchange for $1 on 31st December 11 was 52. This is opening. 31st December 12 is 51. This is closing. And the average rate is 50. This is the average. Now ideally this average could have been 51.5, but that is if you take opening and closing only, but there you can take the average daily, weekly, monthly, in which case the average number can be different. Prepare in head office books the profit and loss and balance sheet of the branch, assuming again an integral foreign operation. Now if I have to prepare this in head office books, I'll have to convert everything of the branch into dollars. Now stock on 1st January 2012, this is opening. This will be converted at the opening rate, which I believe is around 52. Purchases and sales average rate, which is 50. Debtors creditors at the closing rate, 51. Bills receivable payables closing rate, 51. Salaries and wages average rate, 50. Rents, 50. Furniture, I can say that if this is given to me, this will be actual, so this will be at $1750. Bank account, this will be at the closing, 51. New York account, again this will be taken as actual, and hence against this you will record 13,400. Now once you do that, you will take everything in dollars and the balancing figure will appear. This will be a foreign exchange gain or loss. If it appears on the debit side, it is a loss. On the credit side, it is a gain. But again, this will be in the P&L, not in FCTR, because this is an integral branch. Now once you convert this into dollars, then you can prepare trading and profit and loss account like you do it in the usual way, like you do in your 11th standard, 12th standard, CA foundation for example. So if you review question number 16 over here, stock as you see was 52, purchases 50, average 51, 51, salaries and wages 50, 50, furniture is given, you take that, bank 51 closing rate, and then the HO books. The balancing figure over here on the debit side is $2,000 forex loss, and separately you will convert the closing stock. Closing stock over here is 637,500 at the closing rate of 51 will be I think 12,500. So this is your closing stock. Now based on that, if you want to prepare the trading and profit and loss account as well as the balance sheet, 4,500 will be your opening stock. Great. Then purchases 31,250, sales 46,875, closing stock is 12,500, and thereby you will get the profit. Other than that, your expenses like salaries, rent will be taken. So over here we have taken these items. Balance sheet items are yet to be there, and I guess forex loss of 2,000 will also come, and this will give you 17,500 in dollars. You will take it into the balance sheet. In your balance sheet you will have the HO account, which is actually 13,400 actual plus 17,500. Other than that, everything else that was remaining, 15,000 debtors, 10,000 creditors, 10,000, 15,000. Bill receivable, bills payable, 4,000, 3,500. you'll have 3,500 and 4,000. Closing stock of 12,500. Furniture actual at 1,750 and bank at 11,150. And that's about it. So that is a scoring. Question number 16 in front of you. An institute likes asking you questions like these. So you'll go to question number 18 next. Now Messrs. Carlin has head office in New York and branch in Mumbai. Mumbai is an integral clearly given to you of Carlin. Mumbai branch furnishes you with the trial balance on 31st March 12 and the additional information is given below, exactly the same type of data. And you'll have computers were acquired from a remittance of $6,000 received from New York and paid to the suppliers. Depreciate computers at 60%, so maybe depreciation is still pending. But this is the actual amount for the computers, historic amount for the computers. Unsold stock in Mumbai was 4,20,000. This is the closing stock. Rates of exchange may be taken as 40 at the start. This will be, let's say, converted. This is in rupees, so this is divided by 40. Stock at the beginning. Then at 31st March, 42, and the average rate is 41. Conversion in dollars shall be up to 2 decimals. Great. So over here, we're asked to prepare in US dollars the revenue statement for 31st March 12 and the balance sheet same as it would appear in the books of the New York head office of Carlin. You're informed that the Mumbai branch should show a debit balance of 39,609.18. That is actual data in the New York books, and there was no items pending reconciliation. This is exactly on the same lines of question number 16. So if I go to see purchases and sales average 41, it will be up to 2 decimals. Sundry debtors at closing 42, bills of exchange 42, wages and salaries average 41, rent 41, sundry charges 41, computer actual, if I do it in thousands, this is 6,000. Bank balance, this will be I think divided by I believe 42, and New York office 1620, this will be around 13,609.18 or 39,000. 609.18, 39,609.18. Okay. Now depreciation I think is pending, but depreciation will be recorded on the same rate at which fixed assets are recorded. I think fixed assets 240 divided by 6,000 is at 40, maybe at the beginning of the year. So depreciation will also be recorded at the same rate. Depreciation 60%, 6,000 into 60%. This is $3,600 into the rate of 40. 1 lakh. No, sorry. 6,000 is given. So 6,000 into 60%. This is directly 3,600. It is in dollars only. So this is 3,600. So if I review this, you will have question 18 everything. As we sort stock at 40, purchase at 41, debtors, bills at 42, wages and salaries, rent, sundry charges. Computers, as you can see, is at actual, and bank is at 42. This is actual 39,608, and hence there will be a balancing figure, if any. I think coincidentally there is no balancing figure. Otherwise, if it is, it would have been taken in the profit and loss because it is an integral branch. You will use this to prepare the trading and profit and loss account. Opening, purchases, sales, closing. You will convert at closing rate, and then you will get the net loss. This loss after all of this, and there will also be some depreciation of 3,600. So this will be your final loss. In your balance of 39 minus the loss, you will get the answer. And then a further 6,000 minus 3,600, depreciation 2 effects. One in the P&L, one in the balance sheet you will give, and you get the computers at 2,400. I think computer is the only adjustment over here that you need to look at. Otherwise, this is a replica of question number 16. Next, you will go to question number 29. Go to question number 29. There is part A and B over here. Let us review. 39 is a question. Sorry, 31 is a question that you can cancel because it is a question from the amalgamation chapter which is wrongly printed over here. So 31 is not there. You'll just have 29 and 30 and this gets done. So let us review this. The Washington branch of XYZ Mumbai sent the following trial balance as on 31st December 2011. So this is the trial balance. There is head office. This is Washington branch of the Mumbai operation. So you'll have to convert this into rupees, I believe. Head office account, sales, debtors, machinery, cash, stock at the beginning, goods from HO, and expenses. As you can see, this is tallying in dollars. In the books of the head office, the branch account stood as follows: Washington branch. There's the balance. Goods sent to branch. I think this will help you in calculating the actuals over here for conversion. Then you have cash remittance and then closing. So this will probably help you to calculate this balance over here, 8,60,000. Goods are sent to branch at cost plus 10%, and branch sells the goods at invoice price plus 25%. Again, goods are sent to the branch at cost plus 10%. Okay. And the branch sells the goods at invoice price plus 25%. So there is a 10% profit in the goods sent to the branch, and then a further 25% profit on the invoice price. Machinery was acquired on 31st January when the rate was 40. Rates of exchange were 1st January 46, 31st December 48, average rate 47. Great. Machinery is depreciated at 10%, and the branch manager is entitled to a commission of 5% on the profits of the branch. So this is among all the questions, is a little more complicated. You are required to prepare the branch trading and profit and loss account. First, they are asking you to prepare this purely in dollars. There will be no conversion. And then convert the trial balance of the branch into Indian currency and prepare the branch trading and profit and loss account for the branch in the books of the head office. So first you're preparing the branch trading and profit and loss account in dollars. So when you do this in dollars, you will have, let us say, your opening stock, which is, I believe, 11,200 in dollars. Then you will have certain purchases. This is goods from the HO, 64,000. Then you will have, so this is taken. Then you will have sales, I believe, 84,000. Closing stock, if any. Do we have data regarding closing stock? Well, not really. But in such cases, you will have data regarding GP. So if you can somehow find the GP for the branch, we can say that branch is making a GP of invoice price plus 25%. That is 25% on cost, 1/4 on cost. I think that is 1/5 on selling price, if I'm not wrong. So this is invoice price plus 25%. So if 100 was, let's say, the cost for the branch, plus 25 is a profit, this is 125, and hence 25 by 125, this is 1/5, and hence your GP will be 84,000 divided by 5. There are other methods also, but this is 16,800, and thereby the balancing figure, if any, will give you the stock 11,200, 64, 16,800 and 84. So if I subtract this, I believe this is 8,000. This will be your closing stock. Now 16,800 is your profit. Other than that, you have what? Debtors, creditors is balance sheet, machinery, balance sheet, cash at bank, expenses of 5,000, but there is also, I believe, a depreciation. Machine is 24,000, 24,000 into, what is the rate of depreciation? I think 10%, 24,000 into 10%. I think 2,400 will come over here. And there is also some commission. Branch manager is entitled to commission of 5% of the profits of the branch. So over here, this is 16,800 minus 5,000 minus 2,400. Maybe this is 9,400 into 5%. If I am not wrong, this is 470. And thereby, you will get 470 and I think 8,930. This will be the profit ultimately. As you can see, 8,930. This is your trial balance considering everything. The important thing over here is calculation of the 16,800 in a stock becoming 8,000. Now based on that, what is the question further asking you? First point is done. Preparing that branch P&L account in dollars, convert the trial balance into Indian currency and prepare the branch trading and profit and loss account in the books of the head office. So in the books of the head office, this has to be in rupees. So if I had to convert this, this is what? Every item you will convert as it is. So the head office account will be at 8,60,000 actuals. Then you will have sales Sales will be converted at average rate 47. Debtors creditors closing rate 48. Machinery at the historic rate, I believe this is 40. Cash at bank again at the closing rate 48. Stock, this is at the opening, this is 46, I believe. Goods from the head office, goods from the head office is how much? I believe this will be at goods from the head office kidhar 29 lakh 26,000, 29 lakh 26,000, and your expenses over here will be at the average rate of 47. So if I review this, all of this you are preparing, trial balance you are converting. This is actual 8 lakh 60. It's also actual 29 lakh 26. Everything else is similar to earlier problems, and hence there's a forex loss of 46,000, which will go to the P&L if it is an integral branch. Other than that, you will have stock which is going to be converted at $8,000 at 48, which is not there in the trial balance, but will be shown separately, and depreciation will be 2,400 at the rate on the fixed asset balance. So this will be your restated trial balance. Now other than that, they are asking you to prepare the branch trading and profit and loss account in the books of the head office. I would say nothing much over here. Whatever is your converted balance, like opening stock 5,05,200, during the year purchases 29 lakh 26,000, sales 39 lakh 48,000, closing stock of 3 lakh 84. You have done this working over here, and depreciation of 96. Expenses, manager's salary will be converted at the closing rate because the amount will be due at the end of the year. So this is at 48. Forex loss if any, and that will give you the final balance. In your balance sheet, if you had to prepare, I think that is not us, so we will not be required to do it. But if the balance sheet were to be prepared, then this will be shown as payable, the manager's commission, which is not yet paid. Okay, so this takes care of question number 29. Now there is one more question which is remaining, which we can try to discuss over here. So this over here is question number 30. So question number 30 is a recent May 24 exam question. It is quite manageable. It is based on the lines of the foreign branch questions that are done. There is just one adjustment for inventory, which is a little kind of something worth discussing, but otherwise this question is exactly similar to the other problems that are done. So let us review this. Smart Limited is an Indian company and it has branch in New York. Okay, so it's an Indian company with a New York branch. So trial balance of the branch will be in dollars. The following balances in respect of Smart's US branch are provided. So debit balance in USD is given to you. Expenditure excluding depreciation is given to you. Maybe these are all in dollars. Cash and bank, debtors, fixed assets, these are gross. Rate of depreciation on the fixed assets is 20%. So maybe 34,200 into 20%. 6,840 must be the depreciation. Inventory of stock P and stock Q is given to you again in dollars. Credit balance in USD. Incomes, creditors, head office control account is given to you. Now the following additional information is provided. The average exchange rate was 56. So basically expenditure will be converted at 56. If I go to C, other than that, incomes will be converted at 56, and that's about it. Fixed assets were purchased when the exchange rate was 55. So fixed assets over here will be converted at 55. There will be some depreciation on them as well, but as of now they will be converted at the rate of 55 for the fixed asset. Depreciation will also be at the rate on the date at which fixed assets have been converted. Closing exchange rate on the reporting date was 58. So over here, if I look at the cash and bank balance, debtors, creditors, this will all be converted at 58. Stock of item P is valued at cost, that is 55. 20 purchased when the exchange rate was 56.5. This is rate on the date when the purchase was happened, that was given. So if I go to see, for this item the cost would be 55, 20 into 56.5, and hence 5520 into 56.5, This is 3 lakh 11,880. Okay, and the present NRV is 2 lakh 85. So this is cost or NRV, whichever is lower, and hence this will appear at 2 lakh 85,000. This is the NRV which is given to us. Okay. Secondly, stock of item Q is carried at the NRV of 1035, but its cost in USD is 1065. It was purchased at the exchange rate of rupees 53. Again, I have to measure at cost or NRV, whichever is lower. So this over here, by the way, is the NRV, and NRV is at the end of the year, and hence will be converted at the closing rate 1035, converted to the closing rate, which is I think 58. So this is NRV 1035 into 58. Again 1035 into 58 comes to 60,000. 030. You'll have to compare this with cost. Cost is $1065. Remember, you don't compare cost or NRV in dollars. You compare the cost or NRV in rupees. You'll convert both of them into respective rupees and then convert 1065 into rupees. I think 53 is the rate when it was purchased. 1065 into 53 comes to I think 56,445, and hence this will be at 56,445. So one of them is at cost, one of them is at NRV. So I believe these two adjustments are the important adjustments that you should be aware of. Branch control account as per HO's books was 266, 265. So this is perfect. This will directly be at 266 if I take all of these. What I'm going to consider in, let's say, blue, this is 266, 265. You're required to show how it will be reflected in the books of the head office in the form of trial balance if USA branch is classified as an integral foreign operations, clearly told to you integral. So over here, if you were to make the workings, we'll first try to prepare the trial balance. You just need to convert the trial balance for this. If required, I can just drop just a second on a separate page. So let us say if we were to take the trial balance for this, every item you will convert at the respective rate. First you will have expenses, or we can just do it here only. 103,095 into what? 103,095 into 56 comes to a big 57 lakh 73,320. Cash and bank balance 2175 into 58, 126, 150. Debtors 7365 into 58, 427, 170. Now when I look at fixed assets, this is 34,200 on that depreciation of 20%. So 34,200 into 20% comes to what? 6840. So 6840 I think is not being charged, and hence you'll have to make an entry, depreciation account debit to assets. So your asset will now become at 34,200 minus 6840. So your asset will become, I believe, 27,360 into 55. Further, there will also be a depreciation expense of 6840 into 55. So over here 27,360 into 55 comes to around 15,04,800, and depreciation of 6840 into 55 comes to 3,76,200. Inventory, as we said, will be recorded at 285 and then 56,445. Incomes will be converted 132 into 56. This is 73,92,000. Creditors will be 15,570 into 58, 9,03,060, and then there will be HO account. You will try to find the balancing figure, and that will go to the profit and loss because it is an integral foreign operation. So if I just run you through, if I have this handy, okay. So over here, this is from the suggested answers. If you go to see, your expenditure will be, this is other than depreciation, so you'll have to record it separately, around 57 lakh. Cash and bank balance at the closing rate around 126. Debtors at 58. Fixed assets, this is, you'll have to pass an entry for depreciation again. So this is 34,000. I think 200 minus 6840. This will be 27,360 converted at 55. Depreciation also converted at 55. Inventory over here will be 285. Over here will be 56,445. These are two important adjustments for inventory. Income is at 56. creditors at 58, and then your HO account as the actual at 266, 265, and thereby the balancing figure over here will be the exchange difference, and this will be taken into the P&L account. The workings over here will be separately given for the inventory. Remember, inventory you do cost or NRV, whichever is lower, after converting the relevant items into rupees. And I guess that should be it. So over here, this takes care of your, let us say, branch. The next question, if you see, as we said, is an amalgamation question which has wrongly been printed over here, and that is about it. So I hope this has been helpful for you and you have good confidence and clarity in branch. So there are a few things like dependent branch, independent branch, foreign branch, different methods within dependent branch of branch debtors, stock and debtors, trading and profit and loss account, sometimes wholesale price method. So once you get the hang of this, it is a fairly more manageable problem. Again, because there is no standardization like accounting standards, there might be some questions where there might be some inconsistency, but broadly, if you kind of go through this, most of the times the questions are falling in place from here, and it should likes to ask you for one branch where you can test branch as well as AS11 together. So that should be it. Study well, study hard, and good luck. Bye bye. Take care.